stars in the night. So cold rocket dreams, resilience in the fold. Hedge pressure rising, the charts are bold. DD bands rapping, stories untold. Riding with rocket scooter AI. Up we go, reaching for the sky. Every trade hold never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings spinning on their cloud. Riding with rocket scooter AI. Up we go, reaching for the sky. Every trade hold never dies. On the edge as the numbers fly. The pulse ascending, mind on fire, never ending. Trees of gold, endless fight. Push on through the endless night. Riding with a rocket scooter AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Checking the charts with her AI. Up we go, reaching for the sky. Every trade home never dies. On the edge as the numbers fly. Checking the charts, checking the charts. Midnight glory. Time to read in all its splendor.
What's up, friends? Good morning. How are y'all doing today? Can y'all see me? We good? Oh, dude, the stream like cut out for a second there. I was trying to connect my lights. That's what it was. And in connecting my lights, wait, this light is a little dark. My light's somehow magically disconnected. Hold on one second. Friends, welcome back to the stream. We should be good, right? I can see everything. Good morning. Oh. Sorry for the late start, friends. Yeah, when it connects to the lights, the Wi-Fi, it deactivates the action. We're back. I feel like it's a little dark over here though, but maybe we'll see. We'll see. Good morning, guys. All right. What's up, chat? Use internet as peak. Nah, this was a... Yeah, I don't know why my lights were disconnected for some reason. My lights are all on Wi-Fi. I walk in here, it's like a dark room. You try promoting Project X Fiasco on Tradeify? Oh, nice. Well, welcome back to the stream, you guys. All my friends here, everybody. I kind of missed roll call because we're just getting a little bit of a late start here. So everybody that said anything today, hello, good to meet you. Good to see you. First timers, hello, welcome to the stream. We're ready to roll. Yesterday, we had the biggest stream we've ever had on my birthday. We had 11,500 views. Well, the morning views, you know, the afternoon stream in the morning usually adds up to about, you know, 12, 13,000. It was like 16,000 yesterday. Just on those two streams. 11,000 in the morning, man. 1,650 people here. Crazy. Crazy. Appreciate y'all, especially the newer folks. Enjoying the Rock Scooter stream experience? Feel free to leave comments. Let me know. Ask questions. We're here for y'all. All right, I can get ready to get going here. I don't think the internet cut out last night, but something happened because I woke up this morning and everything was gone and disconnected. All my platforms are disconnected. Everything was crazy. Well, we're back now. We're ready to start an exciting day today, y'all. Got no overnight trades, nothing at all. I'm starting fully flat with zeros across the board. I tell you all in chat, if you guys come to the boot camp, I always talk about my trade plans. And the boot camp last night, well, I typed in Discord as well. I'm just like, well, I know trades tonight. Actually, not in the boot camp yesterday because I had to cancel early because it's my birthday, but usually in the boot camp, I'll talk about it. No trades, nothing. Any specific plan for Tradeify Cup team trading? No, well, I'll coach you guys before on a strategy on how to win, you know, these kind of tournaments. There's a good strategy for it. I've already put it together. And we better be getting, like, you know, between all of us, we better be getting that top 10. I think we will. I'm afraid of it. I want that top 10 to be Rock Scooter peeps all across the board. Trading contests are easier if you have good odds on trade setups. The shorter they are, the easier it is to win. The longer they are, you know, the more the skill gap of the trader reveals itself. A longer term tournament, it's going to be harder to, like, luck your way into the top 10. You know, the good traders will be consistent. But like a 5-day tournament or something small, it's quite easy to get yourself in the placement with very minimal skill, a lot of luck, and just knowing a few setups and luck of, like, the market being structured and whatever. And if you get resets, your probabilities go way up because the chances of you know, getting a really strong A+ pivot and failing, you know, each of those times you get a reset is very low. So one of your attempts is bound to do very well. So we all should be pretty much nailing the top of that leaderboard. I've mastered the art of winning a short tournament. How do you join the Tradeify contest? So you just, two ways, right? There's a new giveaway song, Mark. Okay, thanks, man. 2 ways. The ways are as follows. Either A, you have any kind of prop account with Tradeify. Doesn't matter what it is. You buy any account from them, you automatically get free entry into the tournament. Another thing is you just go and you pay to enter, which is like $35. And then once you enter, you go to your dashboard. There's a whole section on the left side of the dashboard for the tournament. And then you go there and then you can elect which team you want to be on. You just click us from the drop down. Speaking of Tradeify, there's some deals going on right now. $30% off Tradeify everything you get from there with our code Rocket Scooter. So, you know, you might as well buy a prop account. You're going to pay $35 for a paper account. Might as well pay 30% off of like an advanced account or something and get a prop account while you're at it for slightly more. Gives you free entry. So that, we've got My Funded Futures had their $3,000 Flex add-on 3X for core and $6,000 4X add-on for scale still, which means your payouts can get 3 and 4 times bigger respectively for those accounts. That puts My Funded Futures core account probably tit for tat with the Funded X Rapids as being the best prop account in the prop space right now. As far as value, cost, payout structure, payout quickness, and payout amount. My Funded Futures core and Funded Next just completely buried top step in the ground with those 2 products. Another big names. So Funded Next 10% off. Normal there. We've got ETF still has their 70% off all non-fast track evaluations. And then their special yesterday ended. So that little special they had, the $99 thing ended. off. No. So the static account, which I tell people is the easiest of all the 3 types of accounts, is static drawdown, right? One fewer rule to deal with. When they go like 70-80% off, they're usually expensive. A static account, but they're easy. That's why they're expensive. That's kind of the rule of props. Something's easier, it's going to be more expensive. If something's harder, it's going to be dirt cheap. And when the more expensive accounts are like 70, 80-90% off, that's the time to scoop them up. So they got their 70% off going on there. And then Apex is 50, Future Desk 70. Spinning wheel. Keep freezing. Oh no! Which firm for the static? Elite Trader Funding, Deepstra. Elite Trader Funding static. Your static is a big fat buffer that doesn't trail with you, right? So end of the day in trailing drawdowns, the drawdown trails with you, so you're really tight no matter how much money you make. Remember, like the BDH is a trailing drawdown. Like I made $70,000 of profit, but if I lost 5,000 the next day, I blew up. You know, static doesn't do that. Static, if you make 70,000, it's $70,000 of buffer plus the original buffer. So and TPT 40% off. I'll tell you guys how we got that going on too. TPT firm good. Yeah, TPT is in our top 3 as far as like prop firms go. TPT is currently our 2nd most used code. When we head into the BDH, it's got to be sometime soon. When Pat gets back from vacation, obviously, and when I'm not in the middle of a trading competition. So, by the way, guys, I want y'all to do me a favor. The Ninja Trader contest. Don't enter the 2nd contest if you haven't. All of us are going to enter Heat 3 of the qualifiers. Okay, not 2, but 3. 2 is about to start, I think, on Monday. The following Monday, we're going to do it. I'm going to give you guys a special link and everything to sign up. It's free to enter. I'm talking free to enter. Okay. And I think that's the same time Tradeify starts. Yeah. Or no, Tradeify is November the 2nd, I thought. Yeah. So I think they start at the same time. But anyways, the Ninja Trader qualifier is free to enter. And I repeat, free to enter. It's a 1-day YOLO contest. We're going to do it. All of us are going to do it because there's prizes. No reason not to. And it's 100% free to enter. Don't try to see if you can't get signed up in Heat 3. If you haven't signed up yet, don't sign up until I give you the link. Okay. I should get it today. They're going to do a similar thing. They're going to clock all the people from our thing. And then I'm going to try to, like, you know, bragging rights for us as well. Again, it's free to enter, so it doesn't cost you anything, and it'll be the same thing as Tradeify. I'll have to give you a link with our name, you know, our code and all that. It's going to cost you 0 to enter, which is nice. Yeah. So I'll drop the link for you guys. I'll be competing in number 3 as well. The qualifier is just simple. It's a 1-day pass or 1-day thing. You basically are YOLOing your shit. And if you're lucky on that first day, you make it to the next round and then you trade it for real. Yeah. Having issues with liquidity map coming up on the platform was dropping out. Not really sure. Yeah, Pat is back from vacation for the BDH. Well, right, we're doing this huge construction project at our house. This is like the 2nd week they've been doing it, or is this the 3rd week? Maybe it's the 3rd week. So we got this huge construction project going on. We can't go anywhere. Well, that's finished, and that's probably got another week or so left. And then after that, we got these tournaments. And then after that, maybe can squeeze in like the week before Thanksgiving, but then it's the holidays, right? So the fence project, now it's the turf and pavers and planters and lights and plumbing, electricity, waterfall project. Now, why does everyone care about me going to BDH? Well, because I won that tournament, right? So part of it is I go there and he hands me the big old fat check for the celebration ceremony. Guess how that goes. 25206. Make sure we mark the yellow line on here. Yellow line is just a strong volume pivot. Long story about what it is. It's based on the margin buffer limit. It's another exploit, just like risk intervals. How you calculate it is pretty cool. There's, again, I can't really give you the whole reason of what it is, but where it comes from is a kind of an explanation. There's a whole class on what this is actually exploiting. But here, like on this day, September the 5th, I drew a distance and drew a line that has been a pivot months later at all-time highs, not even using technical analysis. It's using margin requirements. It's a very cool process. And you can see the pivoting action off of this line above and below. There's something neat going on there, and it's exact to the penny. So when you break through that yellow line, the market can have a very devastating reaction, especially if it's bullish. That can cause a big sell-off. And so you can see, like, over the last couple of days, right, it's been pivoting there. It's a longer term balancing act. You can see you can't argue with what you see, right? Here's pivot, pivot, pivot. Then when you break, that volatility got crazy, right? Especially when you broke it. See all that volume that came from breaking that level. Just another one of our tricks in our bag. And obviously being below it, the market's finding that longer term resistance, which is another thing we were talking about why yesterday I said the market's probably going to sell off pretty soon. That's just sort of like it's hovering on the edge, and it was trading lower and trading lower and trading lower against the yellow line, and it didn't blast up. I know I told people, I was like, I think it's going to sell off, and I was like, I kind of just made an educated guess. Well, this was it, right? It was consolidating and finding lower highs above yellow, and I was like, if it breaks yellow, it's going to spiral out of control. We're also doing a new volatility month where VIX itself is sitting above our new triple B level. It was 18 something. I forget the new number, 18.6. Same as November, so be very careful. VIX at 105, since things are going to be a little choppy, sensitive to news and events, just like before. And already we're playing higher, so this could be another down day. This could be a down month. We also have earnings upon us. Earnings is going to create a little bit extra turmoil, especially in this kind of environment. The index isn't going to shrug off a lot of the earnings reports. It's going to react kind of crazily. Today is T-Mobile, Intel, Honeywell, some other big ones. Blackstone, I think. Let me look it up. I feel like my internet must have went down or something for a hot minute. They're not loading up. All right. What the fuck is going on? Guys, I don't know what the hell's going on here. This is like, internet's being funky today. It keeps glitching out. We're good back then, all right? Can't explain it. Internet's being weird. Oh boy. This is gonna be a fun day. I can already feel it. Let's crawl into a halt here today. Oh boy. Should be good now. You're back. God, what's going on with the damn internet today? Sparking a little bit. Well, we're back. Okay. Pay the bill. Pay all the bill. I only paid part of the bill, so I'm only getting part of the internet. Dang it. I should stop paying my internet bills on Klarna. You know what I'm saying? No clue, man. I keep seeing the circle spin, so I'm not really sure. Question. All right, what do you guys got? Sorry about that. Market's gonna be pretty choppy today. Might actually fall further to DDBM. We got longs and DDBM. Like a flat open again, right? Slightly down to flat. You know, obviously the market has sort of been, you know, trade war, this. This could be a day that pushes up to there. This can be a day that falls down to there. It's one of those kind of variables. VIX is there, so it's sensitive to either direction. The one thing I'm going to do is be very cautious at the open. I might take another, you know, gamble long at the open. In one account, I say gamble long, so I'm always taking one contract, one account sort of thing. Right at the open, keep it light. Then I got 830, right? This is DD band. This is a place for me to take heavy longs off of down here. Down here, we're kind of opening in the middle. Just in case I get a long up, I'll take that open trade. We sold, retrace a little bit. All right. Ever since the cable it's cut, it's been sketchy. Yeah, I know. It's been like crazy. Look at this. You want to see my birthday present? That's how cool we are here. I got a I don't know if you guys can see. Look, I posted on Twitter. I got a brand new skull chain necklace. Pretty dope. Well, it's to match my other one. Like this guy right here. I got this hold on. The skull like bracelet thing right here. So I got this skull bracelet a couple years ago, and it's just like this kick-ass thing with skulls with black diamonds on the eyes. So the eyes have diamonds on them. They're black, which is dope. You know me, Matt and his skull everything, skull all the things. There's like skulls hanging up on the wall there. So she got me the skull chain necklace from John Varvatos, which is my gift for her for my birthday. Very Halloween appropriate. When you're Matt Cowart, every day is Halloween, baby. So I got this cool little chain necklace for my B-Day. She knew it's like that's kind of stuff I like, so she was like hunting it down and got me the cool one. Do y'all go eat at Shenanigans? Is that place with all the goofy shit on the walls? Your first time trading futures, good using your own money or prop site? Well, I can't give you investment advice about kind of like the choice you make. I'll tell you the difference in the two of them. A prop site is a fixed loss that you pay an account. That's the cost. I say loss. That's a cost, and if you pass, you can get a payout. Real money has infinite potential of loss. Well, I guess with a prop account, you can continue to pay and blow up all your money just buying hundreds of those things. But prop account is generally lower risk but harder to pass. Real account, especially a brand new trader, a lot of risks you may not understand. So I always tell people, if you've never traded real trading before, prop is a controlled place to get exposure to the market without going in. Like when I first started trading futures, it's not hard to lose every penny you have on the first trading day. It's leveraged that much. You have to be very careful. The prop space, it's controlled. If you go spend $150 on a prop account, that's it. You're not gonna lose any more. So for new traders, you guys are spoiled. When I had props whenever I was starting out many years ago, props are a great way to practice in a controlled setting, but with some risk on the table. So it's kind of like real trading because you have emotions, risk, reward. It feels real. It'll feel real to you, but also has the same controlled risk environment like paper trading, where you don't blow up your actual money when you lose. Must be a Cartier skull chain. I'm different than her, right? She gets the Cartiers and the Hermes and all that, or Hermes. I don't even know if I say that right. She gets all the bougie fancy stuff, Matt, dude, you get me like a band t-shirt. Actually, this necklace is probably like $600-700, I bet. But Matt's not like give me a new Rolex kind of guy. I'm not that kind of guy. I've always been, the guy that walks into a room and nobody would ever know. The guy with the black t-shirt and the black jeans and the, skull necklace was the wealthiest one in the room. But funny part is, well, I guess I always wear nice shoes though. I mean, you could probably tell my style because I wear like a band t-shirt, like black jeans, and then I'll have like Louboutin shoes on. So like I'll have like something that, okay, this guy has some style or whatever. But normally for me, it's like, give me a skull necklace, I'm good. You don't have to give me anything fancy. Top 3 platforms for futures trading. For futures trading, Tradebait Ninja. Tradebait's good. TradingView is probably the most widely used platform, I would say. What other platforms are good for futures trading? Those are the 2 I use, or the 3 I use. So I'm sure I use Tradebait. I use TradingView. I'm sure here people have other recommendations. The tech bro look has been around for decades. I kind of do look like a tech bro, I guess. Yeah. Your chick spends the money, you make the money. That's it, man. That's it. To me, it's like the thoughtful stuff. Why long at the open? I'm considering it, but I think that probably not. I think at the open, these lows are probably going to test those lows right when we open. So I'm going to kind of wait on this one. I did think about wanting the long at the open. I've convinced myself because of the state of the volatility, I might as well be better off waiting and doing nothing. If you guys are here yesterday, right? I made 30K on the stream in the morning, and somebody said you should make 44 for your 44th birthday. So I ended up making 45. Pretty funny, hilarious day yesterday. All trades yesterday were done on stream, by the way. I also walked in with 0 trades done overnight. The one I'm using, how much if I buy? So the one I'm using right here, Rocket Scooter has all my indicators and tools in it. That's our platform. It doesn't trade props in it though. So I'm actually trading my props in Trade-Evate. I've got Rocket Scooter to the left. I get all my information from. So I remind you of the Silicon Valley multimillionaire driving the 10-year-old Jeep Cherokee. I would be that kind of person. Or like, what was it in Lost? Jack, the surgeon, drove like a 20-year-old Land Rover. You know? I do also have nice car. I have nice car and nice shoes and a nice computer gear. I think if you walk into my office, you'd probably be like, okay, damn, this guy's loaded, because you'll see all the gear I've got. Other than that, I'm pretty simple. Car, I usually have a nice car, you know, nice shoes, that's it. But everything else about me is kind of like, you know. I blend in. I just only get profiled when I walk into like a car dealership, and I'm like, so can I look at the, it's like, hey, I'm looking at the get a new Vanquish, you know, trying out, and the guys kind of like, fuck, I'm wasting my time with these guys. Eye docs in her Crocs. I'm wearing like yoga shorts and a t-shirt, and I look like it's crawling out of bed. And they're like, oh, these guys are actually serious. Because they're always like, so what do you guys do or whatever? Casually, like, I own a bunch of tech companies and there's an eye doctor. And they're like, oh, I'm sorry about that, ma'am and sir. Well, can I get you guys something to drink? All right. That new monitor. Oh no, this is my old monitor. This is my my tablet. I used to actually do my drawing on my screen. I still use my mouse, but this is a tablet where I can actually draw on the screen. But because I have to like look over here and draw, it's just so awkward to do it now. My camera used to be on that side and it was easy to draw and like look at the camera like, hey guys, check this out. But now it's like you guys get to see the back of my head while I draw. It's a little awkward looking, so I don't use it anymore. I got to figure out a way to put my tablet over here. That way I can have good handwriting again. PW's back from vacation. Yeah, no, I'm booked for like the next month. This construction project probably won't wrap up until the end of next week. Just in time for me to do 3 trading competitions at one time. Competition 1, Ninja Trader. Competition 2, Trade-Evate. Competition 3, Pummel Mat Cores into the ground competition. But, you know, chances are, since he's a big pussy, he's not going to show up. And so therefore, I'm going to have a backup competition, which is my random trading account competition. And instead of trading like a 20K account, like I said, I'm going to put 20K in an account and do something random where you guys choose when and where I trade, and I get to pick like a time period, and it's a random trade, and to prove that I can still make money without a trading strategy. And I'm going to do that with 100K instead of 20K. Let's make it more exciting. If, you know, Coors Light doesn't show up, which he won't, then I'll take that 100K I put in that account and I'll put it into the random contest. So starting November, I'll be doing the random trading competition, which is me telling you guys that, you know, my whole kind of prompting social media with those same prompts and posts is that the stock market's random and there's no patterns. You can use TA to predict it. I'm going to prove that without a trading strategy, we'll probably randomly draw someone's name. They'll randomly give me a trade setup or a trade time, and I'll just take it. And I bet you I'll make money even without a trading strategy. You guys will pick random shit for me and I'll still make money. That's what I'm going to prove. The risk management is all you need. This is a game-changing thing that nobody in the world's ever done. I could write a book on this mathematical philosophy. The stock market is random and can't be predicted. However, How do people still do well in it? It's because you're not random and you can do the same thing and you have odds of things happening. But it is random. The people mistake the idea that something at 90% odds is still not random. Random means you can't predict the outcome. Just because somebody has good odds doesn't mean that it's not random. People confuse the two altogether. Random means you can't determine the next outcome. It's indeterminate. Coin flip is random, but there are odds, right? Something happens 99% of the time, it's still random. It could fail 10 million times before it passes hundreds and hundreds of billions of times and still have the same odds. So market's random, and I'm going to prove it with $100,000 on the line. Simple as that. So as soon as that's all over, then we got freaking Thanksgiving and Christmas. I got to squeeze some time. I'll probably make the beginning of December, probably or maybe before Thanksgiving, have some time to get over to BDH. All right, we are long, we are open. Market is flat. Resilience is nice and strong. I was thinking maybe all along at the open, but I'm not really sure. I'm kind of going to go light today. Let me make sure. Oh my God, I get my indicators on here really quick. I think they reset whenever my thing reset. 816 and 6708. Yeah, oops, these are in the wrong place. 816. What the hell? Down here. I have no trades overnight. I might end up, this might end up being a day where I don't get anything. 816. Really, that's way down here? Okay. Do I think we're bullish today? Probably not. Oh crap, this froze again. The trades, yeah. Resilience is nice and strong. But flat opens, we don't trust it too much. Anything can happen. This could be another day we just sell off again. What's going on? Log in. Come on. Where the hell's my... What's going on? Do they conversions not show up? Fuck's going on here? Come on, conversions. Let's go. Okay. Are conversions showing up for anybody? Is it broken for y'all too? What the hell's going on here? Quick, somebody help me. Yeah, conversions. Okay. All right. EST NASDAQ. I'm going to use just a liquidity map. All right. We are QQQ EST. All right. Let's do it EST, baby. QQQ EST, bear zone, bull zone. I'm just estimating it. Something's going on here, man. There we go. All right. Okay, EST liquidity pocket. Grabbing some longs there. Keeping it kind of light today. Good deal, good deal. Keeping it light. Light and fluffy. Easy peasy. All right. Resilience is 10 and 38. So pretty good, right? S&P has nothing except for A plus down at the bottom. Yeah, this is great. So this is gonna be pretty solid, simple, easy day today. I feel like my computer, it's more like my computer is the issue, not the internet. I feel like everything on my computer is sluggish today. Okay. Like, utilization is good. Maybe there was like a lightning strike or something and my computer just went. All right, so LP, liquidity pocket long setups. Chilling on this one. It's pretty simple. If it fails here, then it fails here. And then I just do nothing. If we lose liquidity pocket, I got nothing. Nasdaq, if we lose all of this, I've got A pluses on S&P. So this is a pretty solid setup. Even if I take a loss, no big deal. I've got A plus at 67.18. I've got A plus 67.07. A double plus with MHP there at 67.08. This is perfect. This is a pretty nice little cluster here. Small long at the open to DD band is what I'm doing. I'm going to take a tiny little stop there and start to build right there. Pretty standard fare on how I trade these days. Pretty good setup. Nasdaq, if we lose liquidity pocket, it's dead. There's not a lot below it. Okay. What do we got? What do we got? What do we got? Let's go, let's go, let's go. Pop it, baby. Pop it through that pocket. Come on, hit it through. All right, you guys that went to the boot camp, you're practicing speed. Were you quick today with your analysis? Were y'all quick? Oops, that's not the one I need to quit on. Oops, wrong one. Cool. On the pocket, profit on that. Profit on that. And profit on that. How quick were y'all? Profit on that. Were y'all quick? Were you quick in your analysis? Were you quick in your application? Were you speedy like Gonzalez? Quick and dirty. 8,000 bucks. That was the best 5 minutes of my life. Happy birthday, Matt. Were you quick in analyzing your, when I say quick, quick as in your trade plan. See how quick I was able to do it? So nice, 42, 50, 60, 65, 71, 8,000, 8,500, right out the door. This one was 2, 4, and 6. And these were each 1 and 2. All NASDAQ. Should have bought a car at yesterday's profits. You guys are getting quicker. Remember, quickness is all that matters. Right now, there's a bunch of people like, whoa, maybe I should take the breakout, right? So here, pretty solid EST every single time. Bear zone, bull zone, liquidity pocket, Matt's favorite trade right here on the screen. LPs are dynamite. They are gold, man. This is like my favorite setup. And now I don't have to do anything for the rest of the day. The best part is this is probably better than a lot of people's days, and the market's been open for 5 minutes. So we're good. But quickness, right? Where's the NQMHP? Way down here, 817. Actually, wait, hold on. No, 986. The dynamic was here, but the actual MHP is way down there. Speed is everything. Like when you see the open, I'm able to draw small to DD band, stop 10 points lower, A plus, let's go. I got a phone call. Hold on. Yo, IDOC is sick. Sorry about that. Calling me, chit chat. Okay. So the step number 2, which is bull zone break. Usually when it breaks, I give it some time to develop. And then when it tests the bull zone, then I jump in and try to trade it again. I think with the way that today's market's been playing out and yesterday's market been playing out, I don't want to chase it for breakout longs. Is there a coupon for lifetime? There isn't until Black Friday, and it will be $1,500 off on Black Friday. Yeah, sorry about that. IDOC was calling me, whispering sweet nothings into my ear and singing sexy songs as always. So normally, okay, so trade plan, right? When I say quickness is everything. And the idea is as soon as you get your data, you're able to snap everything together, right? Today, liquidity pocket, 1-to-1 trade with 40-point stop and nothing below. Here, you can go, right? Let's do trade plans really quick. It's all about speed. Cool, we opened. Okay, res is decent. Let me take the gamble. I can trade to some target. What target is it? Well, we don't have anything on S&P. Liquidity pocket on NASDAQ. Cool. Let me get my 10 points S&P or 40 points NASDAQ. We'll stop. 40, and then my next long is at 18. Do I want to hold 20 points upside down? I could with a smaller target, half the price for twice the distance, or I can just trade it in 2 steps. Long, stop, long again with trades 1 and 2 build up on the pocket. as a combination trade, I do have A plus, A plus, A plus together. We call this a cluster. Cluster is always great to build a long inside of. Here, here, and then slightly here on the edge. That's how I build in a cluster. And so I would have longed, stopped, and then longed in all of here and stopped again. And had I stopped one more time, hell, I've got DD band support and an IP, which has a sandwich trade from there. Number 4. So 1, 2, and 3, and 4. So y'all see how that works? This is the same conclusion you guys would have come up with earlier today, baby. When was Black Friday? You forgot? Dude, like, isn't that the day after Thanksgiving? Its lifetime is $1,500 off on Black Friday, yeah. So probably the week before we'll do it. Now, again, this is the secondary trade on bull zone break. Did you guys all come up with a similar sort of trade plan, right? You see all the pieces? Now, again, what happens here? Oh no, it's continuing to long. What do we do, right? Nothing, right? If I miss it, I miss it. That's part of it. I take the guaranteed easy stuff. And from here, what do I do on bull zone breaks is I wait. I give it like an hour. Like, I'm going to wait. Trust me, I'm going to wait. And either A, it's going to give me that bull zone to play on. Or B, I'm not going to chase it. Or I might wait to see if it does consolidate. And if it consolidates high and then pulls back just a little tiny bit like this, I'd be willing to chase in on that for another 10 points on S&P. So this is the newbie chase. And I promise you this, more often than not, when I jump in on this now, it's like 50-50 on what happens. So what I normally do is I wait when you break into bull zone and keep going. Remember, we did open in bear zone. So it's only a 10% chance we go above bull zone and close. Remember, 90% of days should stay in bear zone. So this is the unusual case. So unusual bull breaks, I wait. I promise. Waiting is great. To wait is great. It sounds like a Barney song. Hey kids, wait is great. So waiting is great. I promise you this. And whenever it breaks out like this, it's not 3 or 4 minutes and then get in on this. It's like, okay, I more often than not will miss out on that all the time. The few times I miss out on that, to not jump in here and have it do that on me. A lot of times this happens and it does that on you. Quick question. Did you guys all, boot campers come to a similar conclusion over here for the trade setup? Like you saw all of these different moves? The speed, did y'all do this? Long and open positive res, small trade. If I lose, double down. Some of you might said half my small position at open, hold all the way through, hit the pocket with some more, maybe micros here, minis there. Did y'all do something like that on your plan? Speed is quick, right? So the minute it pops up, you should be able to say, boom. It doesn't take long after a lot of practice to see here, here, and here, and here. The support words help you out and memorization helps you out, but you can see those trade plans very quick, which allowed me to not hesitate in the first 3 minutes to say, yep, liquidity pocket long at the open just to there close out. Quickness is everything, especially in the opening trade, right? Wait is great. Sounds like a lame church camp song. A song about waiting until you get married, right? I got pocket and bull zone bottom recess. Let's go. Yeah. No, but you were trying, still learning. Never, it's just practice, right? It's like playing a musical instrument. The more you practice it, the more you see it. First trade at the open on NASDAQ, it was probably like 45 points. That's it. That's it. Very, very, very cool. Okay. So here, what I do more than anything is I will wait for the retest on bull zone. More often than not, it will happen. I've got a long here and another long here again to play the same range. The market is volatile and above triple B. And when I say market is volatile, I have a rule of thumb and I say, if it's volatile, whatever I want, it's going to happen. So then I just wait for whatever I want. This is what I want. So I tell myself it's probably going to happen. And if it doesn't happen, well, then it didn't happen. Part of trading, then things are random. But what I want is probably going to happen because volatile markets move all over the place. So it's very possible to pass through that. Trump tweet could pass through that. Random European closing can pass that. Hell, the market can just keep going up and I miss out on the biggest little bull squeeze we've seen in a while. And that's okay. But what I do on bull zone breaks is I always wait for the retest. It's part of the handouts. And again, it's just good form to always buy on a dip and not chasing a high. It's better to miss out being the dumb entry to a trade than not get an efficient entry. Efficient entry is how I maintain a high win rate and profitability. This by far is almost end of week 7 of my winning streak. I haven't had a losing day in 7 weeks. It's been crazy. You guys have been able to watch every day, especially the last 2 or 3 days. 2 days. I walk up on the stream with zeros and then I close out with profit. And you get to see all the trades. There wasn't even any overnights either. You can see on the handout. Wait, that's not the one. This is a handout from the boot camp. The handout from the boot camp of the zone combination sandwich or any bull zone break has the same look. When it breaks, I wait as long as I need to. And at some point throughout the day, I look for it to confirm bullishness to go. When you break out of bearishness into bullishness, almost every time it will test. It's that trustworthy. And if it doesn't, then I just miss out, right? On a nice big straight up squeeze day. And that still doesn't hurt my feelings because $8,500 is not missing out on shit. And my brain could, oh man, it could have been like 25,000 or whatever. I don't think like that. I think efficiency. Every trade I make has nothing to do with the money, it has to do with correctness. So here, I would love to see that correctness there. But if not, then I miss out. But I don't like to chase the high here and say, oh crap, I missed out. What am I going to do? It's not, I promise you. This sort of move here can very easily do this, this, and this today. I've seen this day a million times. Yellow line break and retest is what we're probably going to do today. Poke through like it's going to catch, but we are going into earnings and it's probably going to do that. Don't quote me on that. That's just a guess. The market's random. And despite every course seller and Discord seller yesterday that jumped into my Twitter comments to try to say, oh, I can predict the market. Check out my cool payout I got the other day from My Fund and Futures or something silly. None of them showed profitability over a course of time or an argument that says the market is not random. I'm going to be the guy that is like the trader that writes a book that's like the market's random cope. That's the name of it. Things I don't like to short. Well, not a bull market. Like, why would I? Yeah, so when the bull market goes up, when our greater bull market signals are bullish, so DD ratio greater than half, SPY or S&P above MHP, monthly maps bullish, I don't short. I have no short setups. So I don't try to fade a bear market. When those indicators are all bullish, 70% of days are green. So I'm always trading odds. Like, how do I maintain a 75, 80% win rate as trading odds? That's really it. I don't ever try to trade against the herd just because I feel it or want to squeeze a few bucks out of the market. I've learned that you join the market and you just let the market kick your ass one day, and then you're on the wrong side. Then you go to the other side. AQ opening a bear zone and 10% chance closing above. How does that affect SPY opening a bull zone? Right. So SPY usually is the controlling factor of the two. You must factor that in as well. SPY open bullish, it's likely to stay bullish, right? So when you put the two together, SPY open bullish, it's likely to stay bullish. No matter what it does, it's likely to stay there. Remember when I drew this earlier? That probably could be what happens. So this going to bear zone and closing here, it's just like this going to here and closing there. They'll look very identical. And so you can kind of draw the two and saying that, you know, NASDAQ could probably end up down here if it does do what I think it's going to do, which is probably tap DD bands, overshoot that yellow, and probably die out. And maybe just for funsies, I might take a DD tap short because you do have two really strong pivots here. But the problem is that I don't have confluence with it. We tell you no shorting up here without the confluence, but I can short small, right? But right now, there's so much buying on the tape, I probably would like not want to trade short. But honestly, just like we have, obviously this is a short squeeze in the close. Now I'm just going to wait and chill. What's yellow? Margin buffer limits, a longer term pivot. You love it, Cope? Yeah, market's random Cope. Like, that's going to be the name of my book. Is this long off of pre-market earnings? A lot of that can be pre-market earnings, yes. Just retracing a little bit of yesterday, equilibrium searching into earnings season, you know, finding the middle of the range. You can predict the market. It will go up when you long and down when you, up when you short, down when you long. When I say market's random, that's a math problem, actually. It's a very correct statement, by the way. But a lot of people don't understand it because a lot of people just don't understand, not you guys, but a lot of people on socials. They're like, you know, hawking a Discord. Oh, I could totally predict the market, 93% win rate or whatever. I'm like, yeah, but the market's still random. I've got historic 77% win rate this year. Market's still random. It's not the you predicting the market that gives you a high win rate. It's knowing where you trade from. Up or down, I'm going to get it wrong half the time. But because I long from liquidity pocket, you know, boundaries every time, my efficiency is good. So I can lose very small when I'm wrong and then hit the next one and then win when I'm right. I have a 50% win rate, but then I have a massive profit for that day. Being wrong from the right spot is a way to overcome random. Random means you just can't determine the next outcome, and even something with good odds can still be random. Something that happens 9 out of 10 times can still be random. Random is that you can't, the next outcome of a something is indeterminate. You can't figure out, there's no math equation to determine the next outcome. That means it's random. A coin flip, purely random. Probably an equation that looks at like the weight of the coin and whatever, but you'll never be able to guess with accuracy anything other than the odds of what's going to happen. You can't guess it right. You can't pick the next 5 candles, red, green, whatever. So because of that, the goal is market's random. But a lot of people, the finer you zoom in, the worse the randomness gets. Longer periods of time, when you zoom out, the markets, sometimes it kind of transitions to not being random. Over long periods of time, you open up a monthly chart, here's a pattern, market goes up. So on time equals infinity, it's pretty much 100% certain the market will be higher at time infinity than it is time now. So that's a guarantee. There's a pattern. That boundary is market goes up. Okay. But as you zoom in, the finer detail you go, it's gonna be hard to, it's harder to guess like the next month. You could probably say the next year of months are probably green, but then it's harder to even say, well, the next 10 5-minute candles are green. The next 40 1-minute candles are green. The more you zoom in, the more noisy it gets, right? The longer term trend of it goes up over infinity sort of like loses its luster because it doesn't just go straight up every day. So the idea is my arguments, a lot of people are splitting hairs trying to analyze noise on the smallest time frames. Well, you know, on the 1-minute chart, the 5 EMA and the 12 EMA cross each other. And I'm like, you're just trying to find a pattern in noise. Like you're watching pigeons fight over a loaf of bread with a clipboard and create an algorithm to decide which one's going to eat the most. Like, you know, it's like, you can't do it. So the smaller, you know, the smaller the time frame, the more the noisy. And a lot of people spend their careers trying to focus on what's the magic sauce to create the pattern here. And the more you zoom in, the more patterns fail. The less realized they are, the more coin flip. And people have done studies that like TA is just a massive coin flip, which doesn't mean it's wrong. Again, the thing I try to drive home with people is it doesn't matter if you predict the market right or wrong. It matters on where you get in. You need to be right or wrong from the right place. Because I'm going to long from there every time or short from there every time, I'm going to be better off if you long or short from here every time. Like if you had a strategy where you just long or short from a random spot, like that doesn't have meaning, no volume, nothing. If you made all your decisions on the opening range break, I will do infinitely better making all my decisions at hedge pressure. And we will both have the same probability of predicting up or down for the day. We'll both be exactly the same win rate on that, but I'll win more trades because I'm trading from a spot that has more meaning or volume is actually present. The trick to trading that I'm going to prove with this big ass random competition, which means I'm putting $100,000 into an account. I'm going to somehow create a random effect where you guys choose where I trade and when I trade or something like that. I don't get to pick. I don't get to wait for A+ setups. And I got to take my best stab at the market with real money. Over the course of a month, I bet you I'll make money. It's called the Random Trading Challenge. It's to prove that even without a trading strategy or control, I'll have just a medium amount, like the smallest amount of control that I'll still make money and let random people pick what I randomly do and I'll still make money. So that's one thing I want to do for fun. That'll start in November because I'm sure Matt Kors is a pussy. He's not going to show up to his little trading contest he cried about for a month. And so I'll do that instead with that money. So the idea is that when the candles and the fluttering and all that stuff is noise and random, but if you're more efficient in the randomness, then your stats don't appear random. See, the reason I can get 75% win rate is because there are odds here. There are no odds here. You can't even create a reason this means something. What are the odds here? Well, how can you define this? Well, I can define this as where there's defining amount of more bulls than bears and more bears than bulls here. I can define this as a very strong pocket of high probable buyers and sellers. Like I have a definition and like some actuality. In actuality, there's like a reason, there's a thing here. So the idea is when you're efficient and you pick places that are guaranteed to have volume, technically speaking, you will have more control over your trades and you'll have the same. You and I could like be together and both vote. Do I think the next 20-minute, 30-minute candle is up or down? And we will both pick our things. At the end of the day, we'll both be like 50-50. But at the end of the day, I'll have an 80% win rate and you'll have a 30% win rate. Because of efficiency, or longing from the right place and shorting from the right place is more important than picking the direction. And I'm going to literally, because that's what I teach in the boot camp, and I'm going to prove it. I'm literally going to prove it. I could probably put 2 moving averages on a chart and trade when they cross over, trade when they're about to cross over, and still make money at random spots, just with risk management. Well, I wouldn't use the moving averages, but I would say like, okay, I get to wait for like a good pivot or something. Trading where volume is will increase your win rate, but it won't decrease the randomness. And that's really like the lesson here. You're going to guess the direction right or wrong half the time. But me, I react to the randomness. When it runs up to a volume pivot, I know there's buyers there, and that's not random. And that's where the strength comes from, my strategy. Market shifting over to blockchain and crypto, how they may crash the markets. I don't know if financial markets are going to shift to blockchain. It could, but I don't know, man. I feel like Wall Street is like a dinosaur, man. Especially futures is even a bigger dinosaur. They don't move at all. Like they come up with, you know, ideas like 30 years after they need to, and they're like, oh, hey guys, we should add micro futures. It's now 2019? 2019. Let's create micro futures and give people a better denomination to trade stocks. Like, you know, retail trading had been a thing since the early 2000s, maybe the late 90s with E-Trade and all that. Finally, 25 years later, they're like, well, let's make futures cheaper for people to actually trade them. There's millions of average Joes trading in E-Trade and Thinkorswim. Like, that's a great idea, Johnson. Yeah, Thinkorswim came out 20 years ago. So let's, maybe we should get them into futures too. Make futures cheaper. See me go, that's a great idea. Let's do it. 2020. So, yeah. I feel like, you know, it'll probably be like 2075 before the CME group's like, hey, we should use that crypto thing. Let's put the exchanges on the blockchain. Let's go. You know what I mean? It'll be that far into the future. And they don't move that quick. You ever log into like your futures broker's website, like AMP or something? Now, AMP's not that bad. You fill up in Dorman and it looks like a Geocity site from like 1994. You know what I'm saying? Like, I think it's programmed like HTML 1.0 or whatever. Yeah, they like, you know, most of the futures industry is like a fucking computer in a fucking closet with 2 guys on a telephone. Not like a big, you know. It was always the smallest, kind of like clunkiest, not so technologically friendly thing. And then slowly but surely it's evolving, but it evolves at the pace of government, which is pretty slow. What happened at 67.47 S&P yesterday? I don't remember yesterday, man. I don't remember what that was. It could have been monthly hedge pressure yesterday. Yeah, that probably was it. I'm really sure. All right, so for today, guys, I'm going to tell you this is my thought. There to there, somewhere in here, if it resists there, it could be one of those days that does this and this and this. This is very possible. Very, very, very possible. Now, this little support here, consolidation, there is a pretty decent setup from here because there is another 100 points to squeeze if one were advantageous to the long side. Not investment advice, of course. I usually don't chase those straight up runs like this, but it still can go. I usually get that first little burp, call it and wait. Now I usually wait for this to test and it hasn't come back and tested. It's actually broken out once, twice, and now it's trying to break out a third time. So I might not get this test in long, which is totally, you know, acceptable. Happens. Matt's character voices. 70% of them sound like Sylvester Stallone. The other 30% of it sounds like his coach from Rocky. Yeah, get in there, Rock. You know, it's like all my voices are from Rocky 1, so for the most part. Get in there, champ, get him. I sound like Popeye, I guess, in a way too. Any giveaways? Oh, dude, all day today, man. We got it. Am I trying to predict the market? Hey, you stop that right now. Can't predict the market. People are very defensive, like, and here's what it is, right? I know the drill. I remember being small, you know, a decade ago, and big person makes a statement like that, then you go in there and you drop your sauce, your guru sauce, whatever you're selling. Oh, I could predict the market, check it out. You know, you're doing it for engagement, I get it. I remember. I'm the boomer in the room now. I remember what it's like trying to get visibility. Guys posting their call outs in Discord. Oh, I could predict the market, check this call out. And it's like all these lines of text. Maybe you could do this, maybe you could do that, maybe you could go here. If it goes here, then there, then maybe here, then maybe there. And there's like 8 levels posted and 20 lines drawn. And you can see like there's like 7 likes below the post. So you're like, okay, they run a paid service it's really small, and 7 likes, that's good. But then it's like, oh, I could predict the market. And you're like, well, give me a broker statement. I gotta show you anything, bro. I fucking crush it. Look at my payouts. And they're just like, oh god, it's like being the generation ahead of that. I'm like, oh, I remember when I was smaller and trying to build some clout and space, and oh, bless their hearts, they're trying. But yeah, but the claim still stands. The more you zoom in on the market, the smaller your candles, the more noisy the intraday is going to be. And that the past candles don't contain any data to predict the future. Past can predict the future. And that patterns only help you identify where to enter and exit, which is the most important part of a quote unquote pattern. And so entry efficiency is where you enter, exit efficiency is where you exit. Entry efficiency and exit efficiency is the key to a high win rate. When you're wrong, when you're right from the right place, you make a lot of money. When you're wrong from the right place, your losses are always small because they're controlled. There's always gonna be a big buffer liquidity at liquidity pocket because I only wait till long there. The market doesn't overshoot that much. It fights really hard on the edge. So I'm usually not taking a lot of heat jumping in here. If you jumped in here on the long, you're taking a lot of heat before maybe you're right. The psychology of longing from the right place is different. Here, in and out with confidence. I feel great. Made some money very quick. Nothing here. You age an hour for every 5 minutes you're upside down. You feel off. You feel a little weird. You feel a little stressed. You're kind of nervous. Your hands are starting to get sweaty. Your knees are weak. You're throwing up mom spaghetti. You're sitting here like, what's going on? Oh God, I'm nervous. Panic. So the two traders trading here, I'm cool as a cucumber, baby. I don't feel anything. In and out, cool, super chill. Up here, you're sweating a little bit, right? Entry efficiency is everything when it comes to trading. Being wrong from the right place gives you that coolness. You get it? So that, for me, that's how I am. And I tell people in markets are random, you need to figure out how to be more efficient. Patterns are going to try to help you be more efficient. That's the goal. Well, it's a bull flag or bear flag, therefore it's going to go up. Well, there's studies have shown you got a 50% chance it does that and that over infinite amounts of time, especially on smaller time frames. If you go to the 1 minute candle, it's going to be 50-50. If you go to like higher time frames, right? On a higher time frame, a bull flag is probably going to be 70-30 because the market goes up 70% of days, right? So and 70% of months are green. So on a daily chart, you start to identify a bull flag on a daily chart. Probably 70% of it will go up. Still random though. It does have odds. So the more you zoom out, the better the odds are. The more you zoom in, the more coin flippy the odds are. But the difference is that everything works out for you better. Emotions are better. Risk management's better. Control is better. I could take a second trade. I'm just playing with house money now. I can actually take the same risk you're taking. Because I got the good efficient trade, I can jump in here and take a little bit of heat like you guys and be like, all right, fuck it. Let me take a long, right? Let me grab a long. And then I'm sweating less than you because I don't feel as bad. So already I have an advantage in the same trade over a trader jumping in here with the same risk just because I have a cooler composure. because I was efficient on the things that matter. And so really in trading, the way that you can control yourself, just like in poker, is to have that emotional control there. And a lot of it comes from just being efficient, and it naturally works out. I ain't sweating out a lot of the time because I'm not doing stupid shit. This is like A+ trader coaching there. A no-loss strategy. The only no-loss strategy is to sit out from the market. That's it. You never will lose a trade. 100% probability. You only lose if you trade. Am I getting long from here? No, not from here. No. Remember, we're in an environment where Trump can tweet something, anything can happen. I've got no evidence to take along. VIX is still doing the same bullshit it did last month right here. Hovering above triple B. So the market, like all that Trump has to do is fucking sneeze, and the market goes like this. All right. And honestly, we're bumping close to yellow line. I don't long into it that close because, as I mentioned to you guys before, I played this day enough to know that's very possible. You see this path that's trying to go down? That's extremely possible. So no, I wouldn't take the long here at all. I'm going to wait for the confirmation down here at the A+, because it's volatile, anything can happen. This consolidation, break to lows is not the best sign for a move to the higher side. If it doesn't reverse the next 2 minutes, it's coming down. Seeing this way too many times, yellow line rejection. So we need a green candle now to save it. Like I said, if we don't break this in the next 3 or 4 minutes, if we don't break that, it's going to come down. So it needs to consolidate higher. This is just a short squeeze to start off the day. Response to pre-market earnings, obviously. But yeah, God bless you if Trump were to sneeze. Hell yeah. Hell yeah. So yeah, I'm gonna chill on this for a little bit. I like your name, Stock Whisperer. That's pretty cool sounding. The Stock Whisperer. Go up. It's okay. Just go up. Forget the tariffs. You got this. You give it a little pep talk and it just listens. That's a pretty cool name. I really dig it. You have a YouTube channel or something? You do like videos or ratings content? That's pretty dope. That's a cool brand name. I like it. Could you please explain how I set the gold lines? It's a long process. I can't try in a little bit. So let's see. Is this the little support we get here in a second? Futures Legacy Challenge just reached the profit target by about $50. Any benefit to push for more? Don't want to risk blowing it. Legacy? Are you talking with like Funded Next? Is it eval, Badger? If you pass your eval, don't trade anymore. Not investment advice, but if you've passed an eval, you're done. If it's an eval and you pass, they give you a whole new account to go fund it. So there's no benefit making any more on an eval than just passing. Oh yeah. So once you pass, like, pat yourself on the back and you're done. So it looks like it is rescuing itself here. So it might actually go up another bump. Yeah, once you pass eval, you're done. What's the strategy for trading evals versus past accounts? It's a whole process to that, but it really depends on what, like what the cost is and what the sale is and what the discount is. When it comes to evals, you can do two schools of thought. When they're cheap and there's like a huge 80% off or 90% off sale, you literally can brute force long the evals in most bull markets, like long at this pivot, long at this pivot, long at this pivot, spread your risk out. Long at all your heavies. Like if I were to try to pass 20 Apex accounts, I would long 5 there and 5 there and 5 there and 5 there. And as far as the market falls, I'd brute force evals, pass them all, and pay $2 grand to get 20 funded accounts. That's it. Pass them all first day. Does Apex have consistency? An eval? No, it's 1 day pass still, I think. If they're not 90% off sale, then you can't really brute force. Brute force is the simplest and quickest way and most stress-free way to actually go in there and because the market's certain to pivot somewhere. A lot of people do that just to pass the eval and then trade like normal when you go funded. When they're expensive accounts like straight to funded or ETFs direct to funded or you know, my funded futures or something, you're paying $100, $200 account, you might not want to be taking that strategy. Instead, you just have to wait for your A+ setups and then spread out your risk. That's the simplest way, in less expensive or like less brute forcey way when the accounts aren't on sale or they cost a couple $100 a piece and you don't want to spend a lot. Like the firms that are like, okay, it's a $200 account and here we're going to give it to you for 90% off. Okay, so it's 20 and you only pay when you activate it. Like 150, I don't know, when you activate it. This is the cost of the account. This is the throwaway part. So you can literally throw it away. You don't have to worry about blowing up at 20 bucks. You just need to get as many as you can past before the sale ends. And I've done that trick for the longest period of time. Instead of like, you know, when they're expensive and full price, don't do that. Don't waste 200 bucks a pop and, you know, play the pseudo martingale risk spread brute force strategy. These are mathematical strategies. Now, before somebody goes, you can't do that in trading. Prop firm is about trading. Trust the fact that I've won every prop firm competition I go and touch because I fucking game the system, dude. I'm a master at gaming the system. Pat made his BDH. I saw the rules, game the system, won the thing. I'm also a fantastic trader too, but part of prop firms is gaming the system and understanding the rules of the system and playing the math against it. I got lucky. Perfect storm. I got lucky, picked the right side of the trade, understood the rules, understood the assignment, and all of that together was the victory. You got to get all four line up to win, obviously, but not the first time I won a contest, right? So with prop firms, the brute force strategy is a mathematically feasible strategy when the accounts are dirt cheap. Any 80% off or 90% off sale, your least headache is to get as many passed before the sale is over. And you will save money doing that than you would when buying them when they're full price and trying to trade them outright. You'll actually lose a lot more money doing that because of the failures are more expensive. The failures are dirt cheap. Take advantage of the fact that you don't have to be as accurate. You just need to hit all your A+ pivots. You're starting to pass some of them and you only have to pay when you pass. The best part about activation fee is you only pay the large amount when you pass. So it didn't matter what you did before you pass. Does that make sense to you guys? Does that strategy make sense? It's a mathematical exploit of the odds of your failure. And when they're cheap, you can kind of exploit the fact that they're cheap. And you really only have to pay when you pass. So you can use a more throwaway approach because the fee isn't there up front. When there's not an activation fee and it's like 200 bucks or 500 bucks or whatever for an account, you can't exactly do that because you've already paid for the account. You got to kind of treat it more seriously, right? Does that kind of make sense when you guys asking about how you would pass? So different types of accounts have different strategies. When Fund and Next used to have like the no DLL 50% or 40% off with no DLL, and the accounts were like, you know, normally 400 bucks and I was getting them for 2 something. Dude, I would just buy and pass and buy and pass and buy and pass. I've got 30 of them passed, sitting there already passed, ready to go. There's no monthly fee. There's no activation fee. As long as I don't sign the agreement, they sit there forever. And I can just throw one in when I blow up. I've got a whole army of funded accounts just sitting there, not even touched. I haven't even opened them up yet. They're just in the buffer in the queue. Why? Well, because the sale was short-lived and I wanted to stockpile. Imagine like it's like your favorite food, like your favorite snack food, and they're discontinued. Like when they discontinued Twinkies for a while. You go buy every last Twinkie. That way you got a stockpile of them. So I got a stockpile of the no DLL accounts, passed and ready to go, because they had a best sale. Now it's a permanent fixture. But when they were temporary, I was like, I got to stock up on these because this may never come again. And so I utilize that to like my advantage because the no DLL accounts are amazingly easy to scale. Yeah. Am I buying on the retest? Right here at the open, resilience is okay. It's at 4 on S&P, but it's pretty like on the fence on a flat market. We don't trust resilience when it's close to 0. I need it to be at least 50 or greater to make a strong decision on a flat market. Flat market is when S&P opens within 10 points of the close. And if resilience is not 50 or minus 50, it's not strong enough to make a determination. One could technically take a long here. I think I was right by not chasing the long. Remember I told you guys you know, I was feeling that out. I've seen this day a lot. It's very possible that we flush pretty hard today. Not expecting it, but it's definitely possible. So the S&P, what I'd like to see today is I've got some beautiful A+ setups here and here. I've made my career out of dodging the bullshit. Not chasing the high was a great trade as well, right? So do you guys see how not taking the trade is also a trade? But I can't predict the market. The market's random. But I do a pretty good job with the odds as much as I can. So I teach a whole boot camp on how to exploit prop firms and their rules. Rocket Scooter community here gets more prop firm payouts by a factor of probably 50 than any other freaking trading group out there. Have you seen our P&L? There are people rocking our P&L channel. Do you see the payouts people get in this group? There's some smart cookies here, man. This is like the group of prop firm pirates, dude. These are like experts at like knowing the rules, gaming the system. Nobody's cheating or doing anything illegal. They're just playing the rules they have. Well, technically speaking, this is a place I could frame a second small long on if I wanted to. The boot camp. We're halfway through it now, but you can always jump in live and watch the videos. We don't start again until the new year. This is the link for it. Believe it or not, it's only $1 a class. So there's 17 boot camp classes and like 3 bonus classes. The bonus classes are a trader funding program, like master class, like how to game the system and how to play the odds and all that. How many trades I take a day on average? Usually, if you consider all of this on my screen, technically 1 trade, as it was longing in 6 accounts, pretty much at the same time at different intensities. Call this 1 trade, in and out. I'll take probably 2 to 3 trades on average. On the best days, probably like 10. On the BDH tournament, that first day that I got 77K, I made probably like 12 trades that day, 12 or 13 trades. It all depends on what the market gives me. So an example here, resilience is negative, market's flat. What's probably gonna happen very quick is this guy's gonna sort of here, pop like this, and then ask the question in the middle, are we selling off or not? Might be a good chance for me to frame along. Let me try to frame along in this one. Tiny one if I can. Let's see. Keep it light. $40 to $55 on this one. Oops, sorry. Let me put this. That Dom's already over with. No one here. I meant to grab 1, but it looks like I'm committed with 2. I programmed that to say 2. Let me trim it to 1. I don't want 2. Give me a little pop. Let me trim it a little bit. Let's keep that at 1. Bum, 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 bum. This is gonna be a tough trading day, I would say. But popping to 55 really quick, I think, just to retrace, move up. Remember, whatever I want, I'm going to get, so I wait for it. Full deal. All right, one of my bigger accounts, that was good. Just a quickie little scalp of those 10 points. Let me close that out. I had 4 contracts in NASDAQ. On one account, that was $2,000 bucks, and there's like a $500 scalp. That's just what I want to do, is tap the scalp. 10 points on that. Uncertain about the direction here, but let me close that out for profit. Small scalps, right? I don't need to really do much. I don't want to play the direction on this. This is going to be a wobbly trading day. That's in and out. That was another 3 grand. I don't remember. Something like that. All right, fully flat. Here's the update. That's all it took. I'll make a little better screenshot there. Cleaner looking. In and out, baby. It's quick. Remember, I don't have to pick the direction. In and out. All right. $11,000. Total time in the market today was like 7 or 8 minutes, dude. Just trading the halfway point, just to retrace. Resilience is negative. I'm in and out quick. I don't trust resilience when there's a flat market, so I take it with a grain of salt. Cool, calm, collected, baby. No stress today. I took that trade on NASDAQ, yeah. No reason not to take it on ES. Just trading on NASDAQ is fewer contracts, so it's less commission for the same pivot. If I believe they're both going to pivot for the same risk, I'll trade NASDAQ, because for each 1 contract you get, you're going to get 8 on NASDAQ for every 5 you get on the S&P. That's the rate at which they move. Percent for percent gain. So the way the contracts are weighted is that when S&P moves up 5 points, NASDAQ, well, sorry, not 5 points. When S&P moves up 10 points, NASDAQ will move up 40. And when you do the math, for every $500 you make in an S&P contract, you will make $800 in NASDAQ. So you'll make a little bit more for the same commission. Remember, in trading, I've thought of everything. It's a business decision. You don't become profitable in trading by just picking the direction right or wrong. See, I thought of something like that. I save money here and there, just like I own a restaurant. I got my fish for like 5% cheaper from another supplier. You know what I mean? It all adds up over time. So unless S&P is just definitively like a great pivot and NASDAQ's not, I will often proxy trade NASDAQ off an S&P pivot. I also teach that too. Saves you a little bit on commissions. For every $800 I make on NASDAQ, if I try to make S&P $800, I'm going to pay a little bit more in commissions. I have to get a few more contracts. Sam, NASDAQ moves faster per contract. But so S&P hit the pivot, I popped long on NASDAQ. Flat market. Flat market means that when the open from yesterday, from today at 9:30, open. Nice try here. SPY open here. SPY closed here yesterday. Closes at the 4 p.m. close. Open is at 9:30. When they open within 1 strike distance of SPY, so SPY is the gauge here. SPY the ETF. If SPY opens within 1 strike, let me go to SPY and show you what a strike is. Strike is the distance between the option strikes. What the hell? Come on, S&P, freezing up here. Yeah, server is like really slow today. So on S&P, the strike distances are 1 point apart. 668, 669, 670, those are the strikes. When the open and close, which is drawn by this box here, is within 1 strike distance, then it's considered flat. You need to gap up at least one SPY or 1 QQQ. 1 SPY is 10 ES. 1 QQQ is 40 NQ, 40 NASDAQs. So when markets are flat like this, like NASDAQ went from 25.016 to 25.040. It's a 24-point gap. Too flat. When markets are flat, resilience is going to be choppy. This is rule number 1. And we teach you that in the resilience class. And as you see, the resilience is choppy because it's choppy around half gap of stocks. And if the market's opening flat, then some of the stocks are here and some of the stocks are there, and it's just going to kind of like be choppy. We want this white number to be like greater than 50 or less than negative 50 to really define the direction using resilience. If it's just like 10 and 30, it's just considered noise when markets are flat. If you don't get a good strong open on a gap, then we don't use resilience. It's like, well, it's positive. Let me bull the market pretty hard. I bought when it was negative. See, I didn't even consider it. I bought on the pivot just to buy on the pivot, and then I took the scalp and got it out of the way because it's still choppy. Anything can happen. So that whole technique was me just retracing the move, taking profit, getting out, and just waiting. Anything can happen. It's very likely that this, rallies some more. It's very likely this sells off. But see, I took the opening scalp to there. I took the opening scalp to there, my 2 trades, and they were both winners. I've known this for a long time. Do I buy at the top of a bull zone? I do. There is no trade at the top of a bull zone, only the bottom. The probabilities I have are if we open in the bull zone, I bet that we stay in the bull zone. The bull zone top doesn't matter for anything. It's just where the bear zone is not. So bull zone top, not a pivot. Bear zone bottom, not a pivot. Only bull zone bottom and bear zone top are the pivots. So the pivots between a bear and bull zone, when the bull zone's on top, this little box is where your pivots are. So good question, because a lot of people always ask, like, what do you do here? This is not a pivot. Not a pivot at all. Good question. Baby! Woo, we're winning. Okay. Let me go downstairs to check on iDoc. She's sick. 11K today. Let's go. All right. 7-week win streak, you guys. It's been incredible. Y'all have witnessed it. Y'all been here every day. Y'all have watched it. 45K yesterday, 11K today. It's been incredible. Every single day, we're going to do an Elite Trader Funding direct to funded account. So I want you guys to type in ETF really quick. I'll be back in 5 minutes. We'll do a little giveaway here. We'll start that off. Direct to funded giveaway. Funded account, right? Literally, whoever wins this will become a funded trader. I'll be right back. Man, the room smells nice with those flowers. Oh, you guys can't see them. Well, maybe you can. Right here. She had me some flowers. For my, what the heck? Oh no, my glasses are gone. All right, well, no glasses today, I guess. Where the hell did I put them? All right, I'm gonna have to squint. Maybe I put them in the bathroom. Balloonception, man. I got balloons inside of balloons over here. All right, we got a new giveaway song out here today. Motown giveaway. Oh, hell yeah. Market Moving Mountains. We got some good tunes today. Okay. You guys ready? All right. Lead chart funding, direct to funded, right? We love it. Direct to funded program is pretty cool. I trade Tradeify's direct to funded. I'm live with ETF, so I can't trade their eval accounts anymore, or else I would give it a shot. Direct to funded, clear, straightforward path to getting funded. You're funded from day one. Easy as that. There are rules. Get to your profit target and meet your active trading days. Trade certain amount of days, get your profit target, and you're golden. The active trading day rule is a consistency rule that makes sure you trade consistently. Like you can't just YOLO yourself to the top. Every straight to funded program will have some kind of consistency rule, which is pretty standard. Tradeify has one too. It's a great program. Very rare for these firms to have these things. And what's cool about it is that you skip the eval. And the eval part is like a psychological barrier for a lot of people. You're trading, you pass the eval, or you're trading, you blow up the eval, blow up, and you finally go funded. You're like, okay, I'm finally funded. I got to make some money. And then pressure's on and you bust it, right? Direct to funded is like, kind of like once you get used to the program, the pressure of that is off. Every day is a serious trading day that works towards your goal. There's no, man, I got to trade for like 5 days or 3 days in an eval. That's wasted time. It's paper trading. Nobody likes doing that. But with the direct to funded, you are basically just funded from the start, and you have to pass your, the targets already funded. Pretty cool. Big fan of it. There's currently a 70% off of all non-fast tracks. So I think the DTF is also in that category. The 70% off sale right now, ETF. Like, so I'm working with that firm for a little bit. Some friends, from there that used to work with us, and they're constantly evolving and constantly trying to become better, changing their rules for the better. And a lot of firms change their rules for the worse, which I like about them. All right.
Hey, it's time for a giveaway. Oh, yes, it is. Giveaway time. That's right.
Motown giveaway. So, little fun trivia fact. Of all my favorite bands in the world, I'm a huge music snob, right? Huge music snob. And my musical taste varies so crazily. Like, you guys mostly know me as like a metalhead that likes metal or whatever. But if I were to list my top 5 favorite bands on the planet, The Temptations is in the top 5. I'm such a huge fan of the band, the story, everything. I've seen the Temptations miniseries movie like 50 times. I watch it just for a feel good, even though it's sad at the end. But yeah, I love the Temptations. My favorite bands ever. I love early Motown. I feel like I was, like I said, I feel like we were reincarnated because I feel like my last life I was a kid in the 50s. So like if you come over, like we have a dinner party or whatever, we got this Temptations, you know, playlist that we do. Temptations, the Supremes, you know, all that stuff. All right, ready? Spin the wheel. Now I'm almost a guy in his 50s, even though I thought I was born in the 50s at some point. Wish It Would Rain. Oh, yeah. That's a good song. That's a really good song.
Then you can tell us that you did. Please tell us all.
So if you guys are Temptations fans, are you in the camp of you like David Ruffin or you didn't like David Ruffin? Like there's a whole, I'm one of the people that I thought, well, he's the one that got them famous. All their best songs are from like his era of being in the band. You're a Ruffin guy? You're a Ruffin kind of guy? I'm a Ruffin kind of guy. Yeah. Top X, you're the winner of DTF, ETF, baby. But he kind of screwed them up. Yeah, he kind of did. He got that. He was drugs, partying, got that rock star ego. Kind of fucked them up for a little bit. And they had to kick him out of the band. But arguably was probably the best addition to the band. And they're all dead now except for Otis. Otis, the only one still alive. They're from the originals. I still see him touring, man, these days. All right, winner. Where were you at? I didn't see you type. Type the winner. Did I have the Temptations make this song? It almost feels like it, right? Otis was the bomb. Yeah, Otis is good, man. All right. No winner. We're going to spin it again. Motown giveaway, Motown Trader. So I remember like seeing an interview a long time ago with Smokey Robinson talking about Temptation. He was saying, Ricardo Andres, you're the winner. Smokey Robinson, now he said, you know, when the five guys would get in a room, when Ruffin was in the band, he said when they would sing in harmony, it would make the walls vibrate. I remember him saying that. He's like, it's the most powerful thing ever in his life, as far as singers go. Boom, boom, boom. All right, Ricardo, let's go, baby. You want an ETF, DTF. I'll tell you guys how to claim the prize. Like I said, no eval, skip straight to funded. It's a very cool program. They're 70% off right now. You guys can check that out. All right, speaking of giveaways, I feel like we should do another. Hold on, wait. My Fun and Futures. I feel like we should give away like 5 of those today. Let's do some more giveaways. Dude, the market has only been open for an hour. Can you believe that? Time feels like it's going so slow these days. I don't even know why. Well, that's a good thing. You want time to go slow. Ow. You definitely have to go slow in life. You can live all the life you can.
But I knew that when I got it, things would turn.
All right, let's get some My Fun and Futures. Type that up in there. My Fun and Futures, one word. I bought 315 of these. Well, not bought, but I got 315 to give away this month. I bought 200 of them for you with the 10K price from Pat, which I haven't even picked up yet. I probably should give him a call and email them and send him my PayPal or something. I haven't even got the money yet. I figured I'd bug him when he gets back from vacation. But I think he's back now, so maybe I'll bug them later. Yeah, I'm the like weirdest metalhead. Actually, no. I think most metalheads have a weird, eclectic span of musical taste. I listen to metal. I listen to punk. I listen to melodic death metal. Pretty much most everything. You know, rock from the early 2000s, and then Motown from the 50s and 60s. Dude, my CD case as a kid was it's crazy, dude, and that made no sense. You wouldn't know. You wouldn't be able to guess what the person looked like who had my sleeve of CDs. You wouldn't think it was a kid with a mohawk and Jinkos and Doc Martens. The most like headbanger skater punk kid you ever saw. That's cool. I like the Motown, baby. All right. Type in My Fun and Futures. We'll get ready to go in a second. Good deal. All right. We have one more song by Rogue of the Lamb. Let's play it.
Wake up at dawn, chart glowing on my screen. Day trade.
Will I press it up the yellow line here for that second push up? I don't know if they grabbed that open pivot trade there.
Who's gonna cash them checks? Buy low, sell high.
What? Hell yeah, dude. That second long was a banger.
Profits are fine, LPs got me winning. Contracts got me paid. Wall Street wizards in the shade I laid. Day trader swagger, watch my portfolio grow. Digits in the green, counting up the dough. Trading like a pro, in the zone I'm locked. Moving S&P, mountain stocks over rocks. Algorithm thugging, AI on the grind. Putting in the orders, monthly hedge prime. Short squeeze,
Thunder Frenzy, winner number 1.
like a flawless game. Market open bell, chaos about to pop.
Type something in chat, buddy.
Prices never stop. Hedges open down, margin call scream. Clinching G's daily, living the dream. Margin in my pocket, ticker tape flow. Profit margins widen like a flood, these earnings go. Charts flash green, I'm a market kingpin. Rhythm of the market, whoosh rolling in.
Nice, nice, nice. All right, winner number 2, baby. Dude, man, that effect on those like harmonics is pretty cool. Almost like screechy. Yeah, he's getting crazier with this choice making. I love it. Jules, you're the next winner.
Margin in my pocket, ticker tape flow. Profit margins widen like a flood, these earnings go. Charts flash green, I'm a market kingpin. Rhythm of the
Type something in chat, Jules. Did I see the bull zone is 666 on SPY? I don't want to know it. We got to get rid of the doubles number today. Is that yellow line tap? I think we run up to DD band and probably overshoot and pull back. I would say that today's the day where it's probably going to reject DD band. I don't think we rally up, but I could be wrong. We'll see. Very cool song. All right, Jules, Thunder Frenzy, winners number 2. I'll tell you guys how to claim in a minute. You as well, Ricardo. We're taking it light today on the giveaway songs. Just chilling. Harry Houdini, my man. I didn't even call it out. My boy Harry. All right, very cool, very cool. Glad you won, brother. Congrats, congrats. So here's what we have to do in life. So we have to make tough decisions in life sometimes, right? Yesterday we banned somebody for life for cheating. We caught them using 2 accounts to enter the contest. And got a question for you guys. Don't try to like, you know, cater to me what you think I'm gonna say. Don't try to indulge me if you may. Question for you, Vihar. Okay, so that's 4 of you guys. All right. I'll tell you the question in just a second, but let me hand out these accounts. That's for now. Did I say 4? We got 1 more. The cheater that we banned obviously cheated. Sent a heartfelt thing and saying, you know, sorry they did it. They were desperate, out of options. They just they needed something and they tried. They cheated our rules. Our rules are lifetime ban if you cheat. So my question is, can we put it on slow mode so chatters can only send 1 time every time? Actually, I never thought of that. How do I put on slow mode on chat? Yeah, like how do I Sahund Aga. Chat, let me Google this. Where the hell did I do slow mode? Members only chat, live commentary chat. Edit, customization, message delay, slow mode. Okay. So edit, where's the edit button? They just recently changed the layout. The freaking edit here. Okay. Okay. Edit. Customization. Only for giveaways. All right. Slow mode has been added for now. Okay, you can send a message once every 30 seconds. There you go. So my thought is, as I understand and appreciate the heartfelt, you know, commentary of, hey, you know, I only wanted to get advantage, so I cheated. As much as I do appreciate the apology and the lesson learned, we do have, I do have an opinion about this, but community, do you have an opinion about this? And again, I swear I put slow mode on and it's still not working. What the hell? It doesn't feel like it's slow moding. What the hell? I literally, oh god, Suguber, it's not working. I literally have slow mode turned on. This sucks. Literally. Message delay. How long you want participants to wait for sending message? Slow mode. Send a message every 1 minute and 40 seconds. Okay. Dude, slow mode is literally turned on, but you guys can still spam messages. Yes, in the ban, you steal a spot from an honest contester, and if you're desperate, you're not ready to trade. That's number 2. Ricardo has a great answer to that. Yeah. How are you guys hacking my slow mode system? Do greens get subs bypass slow mode? All right. Yo, subs. All right, subs stop. Subs stop testing it. I guess subs can bypass slow mode, I guess, in the settings here. All right, regular folks. All right. Ryan, stop fucking posting. I love you. Stop. Now you can't claim the prize with the delay? Yeah, so what I'm going to have to do is turn slow mode off. Ryan, stop. Hold on. Okay. So I turn slow mode off for the entries, and then when I spin the wheel, turn it off. But that's the thing. I'll turn it on like every 10 seconds. How about that? Okay, so let me turn it off. Hold on. We'll do slow mode every 10 seconds, not 30 seconds. How about that? Okay. That should work. Okay. Maybe the chat could just behave. You guys are a bunch of Wall Street degenerates. Y'all aren't going to behave for shit. Come on now. Y'all aren't going to follow rules. I can't trust any of you guys. Yeah. So y'all are about to make us go to extremes for checking out. So we might initiate a rule. If one person cheats going forward and we catch them, here's what we're gonna do. We're gonna contact the prop firm. If you've never bought a prop firm account before, with that account, we're assuming you're cheating. That's it. First time winners. It'll be hard to win an account if you have no history with that prop firm, right? So we might have to initiate that, and that's 100% cheating preventative, so that you can't go start multiple prop firms. So we'll also start asking our props, you know, check this person's IP, you know, check when they sign up. Oh, they signed up today for the first time. Okay. We might have to say, well, can you prove to us with the same email that you have receipts from another prop firm kind of thing, so that you can't use fake accounts. We might have to get really strict on it. Y'all just stop cheating. But yeah, to the person that cheated yesterday, you are banned for life from our giveaways and banned for life from Rocket Scooter. No mercy. And I hate to say it in a mean way, but so you're stealing from me. You can go fuck yourself. That's how I feel. And fuck you for stealing from me. You know what I'm saying? You're desperate and you're stealing from me. Fuck everything about you. That's how I feel. We all been desperate. Don't be a little bitch. We all been desperate as a trader. Get the fuck over it. Cope harder and man the fuck up. That's my answer to that. Steal from me because you're desperate. And that's ain't no mercy there. I'm your enemy now. If you ever step on my lawn and steal from me, I live in Texas. Don't do that either, right? This ain't gonna happen. It ain't gonna turn out good for you if you do that. Don't steal from people. Hard lesson, but you know, fuck everything about your morals and no mercy there. You're banned for life for being caught cheating. That's it. And I hope you learned a lesson. But being desperate, and there's no excuse for why you did it. That's kind of the worst thing, is that, you know, when I was desperate, I'd steal from people that moment in time. Can I still 10? Yes, you can, because you asked. But yeah, tough up, man. That kind of mentality, desperation, is not a place for traders. And the winners of the giveaways today, no, I won't change the topic really. Winners of the giveaway today, I have to tell you, is Ricardo Andres had the greatest idea. If you are desperate, trading is not where you need to be. That's 100% the right answer. And as a friend, not to be mean, I forgive you for stealing. I forgive you, but you just don't belong here. And that's it. But I'll tell you, as a coach, you're in a desperate place. Trading's not where you need to be. That's a life lesson for a bigger problem in your life. Trading is only going to make your desperation worse and your problems even worse. All right. So today, no more giveaways. Stop typing. Stop typing over. The giveaway winners, Ricardo Andres. Top X did type something, but it wasn't typed in time. That I do know. Or did you? Did you type him? Did he type in time? Hold on. Sahunda God didn't say anything. No, Top X didn't type in time. It was late. Yeah. Okay. So we got to spin the wheel one more time because it looks like Sahunda Aga did not claim the price. So one more spin. One more spin. But yeah, like, I really appreciate our from us. So you can learn from us, since we'll stay on the stream and have fun, but you can appeal to my better side in 6 months. Maybe I'll change my heart. But all right, turn off slow mode. Someone shout NQ. There is, yeah, from bull zone, bear zone, bull zone, sandwich trade, you got to pass through DD band, so it is right there. So if I were long and holding a runner, the runner would be to achieve the next bull zone, but I'm going to tell you, you've got a resistance here and a resistance here in the way. It's going to be harder to achieve that, a lot harder to achieve that. All right, Bruce V. All right, so the winners: Ricardo, Thunder Frenzy, Jules, Harry, Viha Kumar, and Bruce. Here's what you guys do. Go to the Discord, go to the contest channel, look up our admin named Slacks in that Discord. Send them a screenshot of your YouTube ID. Hold on. Thunder Frenzy, Jules, Harry, VR. You got to have an account with My Funded Futures or ETF in the case of Ricardo. Slacks will hook you up with the free account. Let them know the email, show them the screenshot of your YouTube ID, and you are good to go. We'll get your accounts ASAP to y'all. Thanks for playing. We do giveaways all day, every day. Got a couple more coming up in a little bit. This stream has only been on for like, it's only 10 o'clock. That's crazy. That's crazy talk, y'all. How was it only 10 a.m. my time? I feel like I've been here all day. CPI tomorrow. Is the government still closed? Are we still getting CPI? Ryan, why are you crying inside or outside? Don't be crying. You're fine. Lifetime giveaway. So the last day of the month, you have to be here in the stream in the morning at 11 a.m. when we do the giveaway for Giveaway Bonanza. So the last stream of the month, every month, is Giveaway Bonanza. We have so many accounts to give away. We will be giving away over 100 accounts that day. And then we also give away our lifetime that day too. Will we still get CPI if the government's closed? That's the question. Should be tomorrow. Time change coming soon. It's 11. Well, I'm in Central, so it's 10 for me. DD band and pockets not showing up. Try to add liquidity pockets. You have the liquidity map there. If not, what you need to do is clear your cache, restore your settings to default. Make sure you have liquidity map added. Make sure you have try in a different browser. Slacks has a bunch of tricks in case something happened. Browser based, you can have like issues, but yeah. Ryan, somebody said, Ryan, don't be a baby. Man up, Ryan. You'll be fine, brother. You'll be fine. Dun, 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 dun. Whoops. You know what I kind of want to do? Because I have a lot going on in the afternoons and stuff these days. And I love streaming in the afternoons. But man, I kind of have this feeling like watching Pat bring on a teammate to stream in the afternoons. I'm like, should I bring on a teammate to stream in the afternoons? I know it's great to like hang out with you guys all day, every day. But also, would it be cool if I brought on another very awesome Rocket Scooter streamer to stream in the afternoons on the show? Only if it's Gamma, LOL. Hire somebody, come on for a job, they can stream on the channel. Can I explain the price action today? This is horrible. It's lead up in earnings with volatility sort of leading the charge. The afternoons is one thing, but like, you know, when it comes to like me focusing on the boot camp and then streaming up to the boot camp, doing my fun at TV, it's like 8:30 all the way until 5. I'm talking. By the end of boot camp, I've lost my voice, like in life. And so the afternoon stream was just something I did to grind out, but to keep that slot open, if I were to bring somebody else on, would y'all guys like that? Have auditions or whatever? Pay them a big salary to stream? Okay, here, check it out. Triple B, VIX above triple B, we know it's going to be unusually volatile. Market's unusually volatile. We had some Trump tweets send the market down. The market's returning to where it was along that same path of just sort of like inching lower. We already said I was expecting to see the market kind of do this already. And we have earnings. So the market's going to be a choppy shit show because of earnings, trust me. It's not going to be a nice, clean, easy bull market. With VVIX above 100, VIX above 18.6, VIX futures, both of those are recipes for craziness. And then earnings on top of that. So we're going to see a little bit. And I think today, if you guys want, like I told you my opinion, that we're probably there today to finish that off. And then probably there. And I like to think that we were down here, like this equilibrium, sort of like spanning the middle leading into earnings. But like I said, it's anybody's ball game. The price action overall in the general sense is still greater bull market bullish. Like nothing's really bearish over the long haul. And this sort of like rolling, sort of consolidating does look like a breakout's coming. I think we're about to break highs and go. Lance, baby. Oh yeah, I got to get him some bionic eyeballs. You know, if he's going to stream, I think I got a booster seat in there. They can actually, you know, see over the camera or see over the mic. Like they have at restaurants for 4-year-olds. I had to get one of those for Lance's chair when he streams. Poor guy. When his parents take him to eat for his birthday, they ask him if he needs a kids menu, and he's like, I'm 40 years old. Hey son, would you like some crayons? Maybe come stream for me. He can't see, he can't even see anyway. Has he replied to you? Oh no. He made a response video claiming that, okay, I admit I quit trading a long time ago because it's hurting my health and hurting my eyes, and that proves all the reason why you press these gurus. They admit the truth after time. You're not really a trader and trading more. Selling courses, you need money. I get it. That's the typical thing. One Trick Pony popped a couple mil at a prop firm decades ago and probably spent all that money between then and now and trying to sell a I'm a Legend story to sell stuff now. And here's the thing I can tell somebody. Somebody's burnt out as a trader. They don't trade anymore because whatever it is hurts their eyes. Hurts their nuts, hurts their whatever. You know, is that who you want to learn from? Because all they're going to do is teach you how to burn out too. Like I mean, like I feel like people think they can just throw excuses to get sympathy. I'm like, oh, that's even worse. Your trading style burned you out. Jesus Christ, who would? Hey guys, come learn fitness from me. Now, let me explain. I've thrown out every disc in my back. I break my arm probably every 3 months. But bro, $10,000, I'll teach you how to be fucking ripped. You know what I'm saying? Like, you're gonna learn those habits from that person. I tell people that. Fitness D's nuts. That's what I'm saying. You know what I'm saying? Like, yeah, sure, bro. So you're in a wheelchair now, huh? But you're gonna teach me CrossFit. Yeah, how'd you get in the wheelchair? Oh, bro, box jumps, man. Like, but seriously, like, I'm the fucking best, bro. I don't know, man. You're burnout. You're in your 30s and trading's burned you out. Your style's not healthy, man. People teaching those habits. Bro, I had an all candy diet, man. All that energy, fucking, like, that's not healthy, man. I don't know. I don't think you should learn that. That video pleaded to the sympathy of every person out there. You can finally make the admission, okay, I don't trade anymore. That's why I'm still in the boot camp. Feeling like that's only, well, it's even worse. Your trading style hurts you and burns people out. Please don't pay money to end up in a wheelchair in your mid-30s with your eyeballs no longer able to see a damn computer screen. There's the boot camp. If you guys want to sign up, ours is $1 a class. Much more affordable, I would say, than most people. Nobody ever got injured eating a pizza. This is true. One all candy diet, yeah. You're quitting trading because your small toenail is sore. That's probably for the best. Straight leg box jumps to the top. I don't even bend my knees, bro. Bend your knees for wusses. I just jump with my legs straight as possible. Makes your joints stronger, man. Land on the ground. Don't bend your knees. Cushions for sissies. Take all the force in your knees. Lock them in. A 10K course has to give more value than $20, right? Yo, 100%. That is 5,000 or 500 times the value. I'm telling you. It scales linear. If you pay $10,000 for a class, you will get infinite 500 times the value. It's a lot of value. Is Trump talking today? Not that I have read, but I don't know. If we do, so wait, what was the consensus? Do we not get CPI tomorrow because government is closed? Yes or no on CPI? Some of you guys, I don't know. It's a government report, so I'm assuming we do still get it. It's a, hold on. The CPI is, it's a government report, I thought. Hold on, maybe it's not a gov report. We still get it? Grok says yes. So the BLS is releasing the data despite government shutdown. Oh, thank you, bud. Jay Quinn with the answer there. Yes, sir. Yeah, because it's BLS that does that report. That I didn't know, but that's cool. At least they're releasing that because it's important. He's talking today, and an insider just opened a $410 million short. Damn. It's needed for Fed. Yeah, I guess. Do I want to pop a short at upper DD band? I feel like that'd be kind of a risky sort of bet, but up in the pocket on here, it's kind of bet that we end up sort of where we started. What do y'all think? Like, that's not going to rally up. I don't know. Should I be a baller on this one? Should I just like say fuck it and go for it when it pops? Not really a strong short. We have a no shorting rule off of the upper bands here, but but the idea is got yellow line, got liquidity pocket, you got basically resistance, resistance, resistance for the most part here. And then we broke from bull, bear, bull. So actually we did close in an IP. That's really close to here, but it'd be very possible to end up there. That's what I'm curious about. Maybe if Trump says something and we get like a nice green pop, I'll just kick it back down. I don't know, what do y'all think? It feels like it wants to come down. Sahund Aga? Yeah, man, you missed it, man. That was an hour ago. You were the winner, but you weren't here. Like I want to short too. I feel like it, but I don't have a good signal for it. And I always short off of a high. I never short when markets are consolidating. That's new rule of shorting. Like if I think it's going to come down and it's a bull market and I say, fuck all the rules, I just want to short it anyways, I never, ever, ever jump in like here and short it down. I always wait because there's always some bullshit that'll happen. All of a sudden it does this and then it goes whoop, 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 and it pops like crazy. And then I try to get in on the ridiculous exhaustion point. I never really like bet on consolidation falling in a bull market. As much as it feels like it wants to come down, I'm more willing to miss out on that too than to not kind of jump in and consult. I always want to take the blind monkey stance that the breakout continues to go and it always will reverse from a high, not from consolidation because it's liquid, right? Is Matt the Antichrist on Wall Street? Of Wall Street? I'm here to shake it up. Trump pardons the Binance CEO. Is that what's going on? The Elliott wave Lance Tory patterns developing. Oh yeah. That's the best one. All of those people have everything in common. They're a bunch of crybabies who cry on social media a lot about why they're not good at trading or why they can't do something or something. No results, just tears. Both of them have made a crying video, like explaining away their actions. Pretty common in the free root industry. You wish most of them would just show up and put a camera on their trades. You know, that's the easiest way. Talk people through it. This is the setup. Let me draw it before I do it, and then you can watch it. Oh, guys, I'm so sorry. Like, it's just like, I've had such a hard time in life. Oh. That's what most of this is like. And that sympathy card gets a lot of subs, I bet. A lot of simp subs. Oh, she's so brave. Oh, look at her. Look how brave she is. Guys, be nice to her. She's so brave. You trade on earnings time? I trade just normal earnings or not. Same every day. But Lance can't cry anymore. His tear ducts are dry. Yeah. Poor guy. If I had $100 million, I would buy an eye drops company. Okay. So I'd have an infinite supply of them. I wouldn't even just buy the eye drops. I would own Visine head on. Well, I think today is going to be kind of a toss up. I do think we pop a little bit higher. You possibly drop after this. It's very, like I said, breaking through that yellow. We get it up at 25.8, 25, 280, 300. That's very possible. That's why I'm not shorting from here. You gotta be very careful. The trick when you have bull markets and you want to catch a short fade, never short in consolidation of bull market. Always assume it can go higher, and it will, and then let it have the ridiculous large green candle and then short off of a green candle. Never see it chopping like this and bet consolidation brings the market down. It's not investment advice. I'm just saying entry efficiency is so important, right? If you want to short as much as you can, always short from a high in any environment. It's very good advice. Markets don't necessarily fall that easily just from liquidity. They more often squeeze the last remaining bears, and then they like pop really high, then they turn around. It's more common. So, like if I were to short this, I'd let it squeeze up to 280, 300 and pop that overshoot on the bull zone, then fade it back in below DD band. Like let it complete the move and dismiss out anything in the middle. Like I said, efficiency is very important, but it's more important in shorting than is longing. Longing is not volatile and it like rewards stupidity. You could jump in, chase longs all you want. It's not that bad, but shorting, unless you're exact, that volatility will kill you. Or markets are a little more volatile. Yep. So for me, I think it might be like wise for myself. I actually might try to play a small short, just a small one. When we do pop through the upper DD band, hit that top pocket, I might try it. Not often I do that. I don't normally shoot off of DD bands. I just have a suspicion today. That would be a terrible decision. I'll keep it small in just a couple of accounts. Not go too crazy with it. Yeah, see, I say from consolidation, I don't pop shorts like that. The worst feeling in the world is to pop a short, the market consolidating and is liquid and just squeezes against you and you're riding it all day upside down. Efficiency is everything. See, I was earlier, I was like, I wouldn't be shorting and I didn't. Just waiting, baby. Just waiting it up. Making good decisions left and right. Goal of a day trader. I'm about to have myself a mat cookie. Do I consider this a slow day? It's like medium slow. It's not too slow, but it's definitely not a fast day for sure. Top of bear zone looking tasty. Trade him right out here. Yellow, second time, 206. Probably try something off a yellow. Look at this Oppenheimer mat on the cookie. What's upper band? DD band's a risk interval band based on margin requirements. It's a pivot that only 4% of days break above and 88% of days stay between and 8% of days stay below by the end of the day. So by the end of the day, price is likely to be here rather than there. So I consider it usually like one of your first like stopgap resistance pivots on a move up. Am I shorting? I am debating it. Maybe if it completes CD, I might. Again, we have a no shorting rule. I don't have confluence for it, so clearly I would tap it very, very, very light. Off of here. If anything at all. This is a sandwich trade, so you're going to have power to go all the way to there. So I have to keep in mind that the overshoot could be real, even if I didn't want to take a tap short off of it. I might not stream this afternoon because I got to go manage this project downstairs a little bit. And IDOC is still like, she's really sick now. She got really sick last night. Like flu-like symptoms. So I might not stream in the afternoon. I know. Sad days. That's pretty swift. Dang, looking nice. Yeah, yellow line's no joke, man. We're just chilling on this. That's pretty gnarly. My suspicion is the short, but it's not a good enough setup. That yellow line is always a resistance pivot to take a gamble on, but it's just too low of a, or too much of a coin flip for me to really like want to bank on it. Yellow line is margin of error. You guys want a quickie lesson on yellow line? Oh, dude, it's a magic number. It's so good. Okay, so first and foremost, the platform gives you a number here. Okay, let me give it to you really quick. S&P is 464. So let me write that down just so we know. $464. Then what you do is you go, and that number change when margin requirements change, is you're going to go to like an ES chart. I've got all of the history of all of them on there. But what you're going to do is you're going to find an instance where the market creates what's called an anchor point, like an event, right, that moves the market higher. You're going to find an anchor point. I go to let's go to like a 5-minute chart and zoom out so we can kind of see like history of the market moving. I usually mark them up. Here's an example. Most of my folks will understand how to do this. I'm just going to draw a little thing here. Just I think it's there, but we're going to zoom in and look. Okay. And you do it on a tick chart at the moment in time. I'm kind of like was lazy on this one, so I didn't do it. So I'm gonna have to kind of estimate as best I can. Let's go back in time to wherever that was. Okay, where the hell was it? A week ago. Okay, let's go all the way back. Okay. What I'm looking for is an imbalance where the market kind of moves in a direction, up or down, without retracing to find liquidity in the middle. So buy imbalance pushes it up, sell imbalance pushes it down. If you have buyers, 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 sellers, 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 and the market's trying to find the middle, when you achieve the middle, it's more balanced than if you don't. If here it doesn't retrace to the middle from this way, if you look for like the non-overlappingness of the chart, it just kind of like very crudely shows that from this moment in time, the buy imbalance was overwhelming the sell imbalance, right, leading the open. So this creates what we call an anchor point. This moment in time, the fact that you didn't have enough sellers to make it back to the middle, the buyers still overwhelmed them. And you measure 464 points in the bottom. As crazy as it is, what this is 6,600. Okay, so 464, 7,064. So what you do is you can draw a yellow line at 7,064 and watch. What you'll notice, let's just copy this one. Is when you get there, it's a resistance pivot. This is an exploit of something on the CME groups. Like in the CME groups, like bag of market control stuff. Let's go back to it. So I'm just gonna, I always like to mark it here just so we can stay kind of like on top of it. And that's it. Now let me show you the history of these things. Let me show you something very cool about it. Oops. Or was this the one? 764. This guy right here. Oh, hold on. Oops, I drew that box in the wrong place, didn't I? And that one doesn't apply. Oops. That one is not applicable anymore. It's right here. Let me show you something cool about it. Close enough. Okay. So as long as that red line that I drew is never touched, this yellow line stays with it. Now let me show you something very cool about these lines. They are high volume pivots, period. When you touch them, they're going to pivot no matter what. Left and right. It's more of a coin flip, but we use as an interrupt to market movement. Now let me see if I can go back further. All right, this particular day. And now again, we're nowhere near 7,000, but when we get there, we'll remember that pivot. When you approach it, do you see how the market moves? 464 is a number in the platform that we give you. It's based on the margin buffer limit. It's a whole nother exploit of mine. Sorry, does everybody see this candle? Right? It hit it. It sold off of it. It sold a little bit more. It pressed it again. It fought there, returned to there, dropped from there, hit there. This pivot is months in advance. It becomes a place of interest where the market is deciding longer term trends. You're going to see bounces off of it, bounces off of it, bounces under it. And so what the rule is, when you trade into it, you close out, let it define itself on the other side, and then get back in. You usually utilize it like it's the end of upward move many of the times, and it can cause sort of like rejection when you lose it. Here's an example of 6741 or 6471. Broke through, bounce, 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 broke through, lost it, market gets crazy. When you lose it, markets can reverse pretty heavily. And it's you see how the line just literally pivots for the longest time. There's some risk controls going on there in the market. It's like Globex level stuff. Here's a sell-off from that same line. You guys are believers yet? You want me to keep showing you like 5 more examples? Market just loves that pivot, and there's a lot that goes on there. And you just treat it like it's resistance. You don't try to short off of it, but you can. It's more of a coin flip than anything. If you go all the way back in time, you'll see some really cool shit with these yellow lines. I mean, it's to the penny. Look at this guy right here. Calculated in June, and in August, it's pivoting. That's how good it is. And it looks in the future, and it looks at all-time highs. So you get a pivot into all-time highs when you have no TA up there. You have literally at all-time highs, no resistances or support to draw your triangles and squares off of, or whatever you're doing with TA highs and lows. This is a projection using margin requirements on how far the market's going to stretch per incremental change over longer periods of time. And dude, it's just so freaking good. Heavy drop. Oh, look at that. Yeah, and so in today's an example. Like, I don't long into the yellow line. It's normally seen as a solid resistance when they're nearby. And those particular days, we just treat it light. Like here, you see this? Sell off, break, sell off, break, but it hovers and makes defining moves off of this line. And because it's like down, up, it's considered random. So we don't short off of it every time, but you can if you want. For shorting efficiency, it's a very good short to take because it's defined pretty easily, but it's not a high probable short. It's just if you short, it's from there. And as you see, there's a move that somebody could have made 90 points off of it, right? I don't particularly like to short off a yellow, but what I do use it for is to get out of a long when you bump into it. If I was long, that's pretty much the end of the move most days. And you don't bet that you push through it. Does that make sense, everybody? Love that pivot from Popeyes. Saw somebody saying that in chat. You guys follow that? So the idea, margin buffer limit has to do with dealers. And the way that it works is that if you were to long the market, again, all my stuff is a clever like exploit. It's a hack. It's not technical stuff. Here's what this is actually doing. If you were to long the market, I'll tell you the equation right now. If you were to long the market here in abundance, like 10,000 futures contracts, okay? Then you got a dealer on the other side of that contract. They're short 10,000 bucks, 10,000 contracts at the full margin, whatever it is, right? And you bought right here and they're on the other side. Chances are of them finding a trade for the other side of your trade is very low, especially if everybody's bullish. And as soon as the market goes up a certain distance, where the net marginal value of that contract, 99% of it's lost, you hit the margin buffer limit. There's a lot that goes on there without explaining what it is. We'll just call it a magic number. Like if the margin requirement is 20,000 bucks, or let's make it easy. The margin requirement is $10,000, okay? And you were just short a contract at $10,000 and it goes up against you. As soon as you lost $9,900 and you had $100 left in your account, that total distance traveled is the yellow line for the most part. So it's the dealer's squeeze point where they've lost 99% of the value of being on the other side of your trade. Before I explain to you why 99% is important and why the measuring anchor point is important, that's sort of like more proprietary juice underneath it. But that 99% number of total loss of value of the contract is a magic pivot that leads to some interesting effects, as in it's a very solid resistance pivot. It's always a volume pivot every time. It's about a 50-50 observable. You can't ever guess if it's going to resist or not, but we call it an interrupt. So a nice strong bull day that bumps into a yellow line, you go, oh shit, well there's my exit target. Without the exit target, which is this gray line, you choose an exit target. You choose whichever one's nearby. Normally it's DD band, but here it's yellow line today, right? So what's actually going on? The contract loses 99% of the value. Well, the dealers are almost about to blow up on their position. For the dealers to lose all the value of the contract, you risk a liquidation event. You risk a margin call. At that level, other dealers are mobilized to buffer price movement by providing liquidity with incentive. Now, hey guys, at this level, there's some dealers from months ago that are still upside down, that are about to go negative on their positions. They're going to have to rush and buy some quick 0-day calls and the market's becoming stable. And so another market maker come in and say, well, let me take the position off their hands. Let me hold it there. Let me sell to them and then get out of the trade and I'll take the risk. And then so you see buffering at that level. You just see selling volume magically appear. It's usually a dealer handoff to prevent dealer liquidation. All of our stuff is along those lines. Everything Rockseer is along those lines of hacking the market sort of shit. So it is more of like, sort of like, you don't know if dealers like, I'm cool, or dealers like, yeah, I'm mobilized liquidity, but that's what we believe is going on there. But again, contract loses 99% of marginal value. You will see a volume pivot off of a strong, easily identifiable bull or bear run that creates a large move off an imbalance. Yeah. Where do you draw the yellow line? I just did it, man. You got to rewind the stream. Dealer squeeze point, but they always hedge neutral. It's one of those things we don't exactly know all of what's going on there. We just know that volume is mobilized. Now, whether it's hard to believe it's the same traders doubling down, it's likely to be other traders being incentivized, like a firm saying, hey, if I squeeze this, I'm about to be upside down and I got to cough up $10 million to hold on to this position based on the perceived risk of how far it'll go. If I just pay you $1 million, will you take it off my hands? And the other firm can say, done, we'll take it. And so the dealers make a lesser loss and they mobilize liquidity there, something like that. We think things like that's what's going on. Hey man, we're about to blow up. Can you take this position off our hands? Well, what's your risk? Well, if we blow up or down 20 mil. All right, I'll take it from you for $1 mil. All right, well, that's a lesser loss deal. Shake hands. All right, let me dump it to the market. You guys sell it there. And I think, but also I think a lot of it's mechanical too. But the CME group just automatically buffers liquidity because in SPAN, they know where people's positions are. So they'll be able to identify there is a big position that has risk here. They might just ask the market, even if it's not a deal made between firms. CME just may auction off that level. Like, hey, we're going to pay better fees if somebody sells here because we got a dealer or we got some position at risk. And so mobilizing liquidity, you can read in the velocity logic portion of CME's autopilot stuff on the Globex. It talks about mobilizing liquidity. If the market moves too far, too fast, they have a protocol where they auction off those trades to the highest bidder and they'll pay more commissions to somebody to take a risky trade off of big orders. So this is like a potential big order. If somebody's squeezed and they're going to have to potentially cover a very large order, then they also likely mobilize liquidity in the same fashion. Again, we can't pierce the veil to see what happens. We can only observe it mathematically. But we know it's a pivot. We know it's a high volume, and we know when I long, I usually exit my long at the yellow and wait to see what happens after that. So we don't exactly know how's it going. Total margin requirement went up over the month and market's still rising. That's not abnormal. Margin requirement goes up when the implied volatility goes up. Usually, when people's positions are more spread out, the volatility will go up. Even though the market's going up, it's not the going up part that usually makes margin requirements bigger or smaller. It's the fact that we're going up and it's chopping thousands of points. Always is going to make margin requirements go up when the volatility is like that. VIX above triple B, you can bet that margin requirements are likely going to go up if the market starts chopping. Yes, sir. Ben FX, what's dude? You've been watching your content for some time now and you've decided to lock in and you're trading for 12 months and be showing every moment of it on your channel. I appreciate that, man. Lock in. You can feel a solid short off DD band this time. It's very possible, but also the thing is that if we get there, you are breaking through yellow a second time, so it may not be a good short because of this one fact, right? It's trying to reject this bigger area, and if it does squeeze here, it can be so powerful that I wouldn't short it off of there any further than playing between those pivots. I wouldn't be betting that DD's a reversal now more I look at it if it achieves it a second time. I'd be more scared to do that because if it breaks here, it might confirm a bigger, stronger break. So I'm gonna let you guys, I won't be shorting it. I've kind of just talked myself out of it. With margin rising, what does that mean to reduce market participants to avoid volatility? Well, that's the battle, right? If the market becomes, or the actual expected move of futures deviation, remember, margin requirements are based on how much futures quickly deviate on a step change when it needs to track a large movement in stocks, right? And so that's based on span, and that's based on how distributed positions are. The people report their positions. If they're more spread out, then the buyers and sellers are more spread out, so the implied volatility is larger. They'll raise margin requirements to make it more expensive to trade, such that there's not as much brute force contract selling on the boundaries of risk. When it's more expensive, you can buy less of the things. So there's less of there's like less bullets in the gun or less BBs in the shotgun. It's a lesser blast when they make it more expensive. So to combat volatility and keep markets more in check, margin requirements usually will go up when volatility is going beyond a threshold. So you expect it to go up on point. Yeah, like what you're saying. They're reducing market participants when they raise margin requirements. Yeah, for the total number of money available to trade, if you make the thing more expensive, theoretically, fewer people can participate. If you got 20 grand in your account, margin requirements 10, you can buy 2 contracts. And when you get squeezed, you're bombarding the market with 2 on a market sell. But the contract was twice as expensive and you had 20 grand and it was 20 grand, you only had 1. So when you got squeezed, you only dumped 1. It's less selling to the bid and therefore less pressure to the market. In periods of volatility, they like to raise the margin requirement to reduce participation and also reduce risk of when people get squeezed of how much is actually dumped, right? Fewer contracts dumped, even though the total number of dollars invested is the same, the mechanics of the number of contracts, the total open interest is reduced, which, you know, in theory can help keep volatility more in check. Somebody said, dude, your levels are like no other, unreal. Well, they're all based on actual mechanical things in like the video poker machine. I always say this, like, you know, day trading on the Globex is like video poker. There's a machine that's designed to run a certain way and it like has parameters, but it's not necessarily like just a free market. There's control systems on this thing. You know, markets do something, we pause it and do something else. There's all these like autopilot things that are going on with where prices are quoted and where market makers step in and out. And we just figured out, you know, that's where the consistency is because somebody does something there every time. So that's more consistent than price action. So the fact that all the levels that I have are based on a substantial thing like that. Bull and bear zones based off of delta hedging. Yellow line based on market makers blowing up. Like, you know, there's some substance to it, which is what makes them so strong. And because a lot of people are doing the same thing every time at these places, that's why it's more repeatable than anything. Yeah, we took a different take to the market. Why I believe overnight pivots are still valid in the day? Probably because of Asian and European traders. The going theory is that, you know, the overnight real-time open interest estimate, other major hedge funds have discovered something similar and they're behaving on those levels overnight. And then they're in Asia and Europe, so they go to bed, and then their algorithms are still trading those levels throughout the day in their markets. When they're open, they're trading live, but then in our markets, when they're sleeping, they're hedging still at the same spot because they still have risk on the table. That's the only reason, the only logical reason that the pivot would still be acting is that somebody still has a position at risk there or in that vicinity. So something that's there overnight with an estimate, why wouldn't they just use the real-time data in the daytime? Well, maybe they're just a firm that's across the planet, or maybe other firms know that they're doing that and they're hedging their risk there, and it just stays there same way. Like I said, that's our best theory, is that other people have stumbled upon a similar calculation to find other people's risk, and they're just hedging there or trading there all day. I don't really take this short off of upper DD band when the DD ratio is greater than half. Not when it's 80%, no, I won't. And if there's enough juice to crush through yellow, there's probably enough juice to not sell off, and there's a liquidity pocket here. So the problem becomes crushing through yellow is a bull confirmation of a longer term trend, and entering a liquidity pocket is like a place where the market's gonna like love being. Now, if we go to DD band and we lose yellow a second time, I'd be willing to jump in on the short here to sell off. I need to see like a failed bull breakout and then confirmation of returning to here. Be a little riskier for me to take the short here, but I also could and just set a tight stop. But it's more guaranteed for me to wait, let it try to break, then let it fail, and if it fails, the fall is really big. So I would probably jump in there personally, if that makes sense. I don't know what you guys think. What do y'all think about that? So we do teach all of this in the boot camp. It has a 20-day, it's a 20 class course series, and the course series is 17 classes, and each one covers like a completely different cool topic. It's only $20. So as Andrew said, you don't get cool points for being early to a bear party. Yeah, exactly. As Andrew said, bear trades, I don't like to guess on a bear trade. I like to confirm it. Very easy. If it breaks yellow, tries to push, hits the bull, loses green, loses yellow, and it's sitting there, and I'm like, okay, yeah, let's just bet on the fall there. And so, you know, I like to kind of trade like that, and really sort of like, remember I told you guys earlier, right? When it's consolidating, I never choose short from the middle. I let it pop and try to take shorts if I'm doing. Be more efficient in your shorting. That's like the thing I challenge people to do the most, is when the market's consolidating, fire along at it and then double down if it dips. Pretty common to do that. When market's consolidating, I never fire a short and then double down when it pops. I usually wait and enter the first time on the pop. I'm a little different when it comes to shorting, yeah. How does stock typically react to hitting weekly hedge pressure, like Nvidia right now? Typically, it's a bounce. If you hit it from below, it's a bounce. If you hit it from above, usually it's a breakthrough. So 40% of days break, 40% of days, at least on SPY, break hedge pressure to the upside. So 60% of days should stay here, but 40% will break above. If it breaks above, it's a second bull trade, yeah. Yeah. Hello? Clown show announcement at 3 p.m. Wait, we got more Trump stuff? Do I ever go into details on how to draw the lines and the areas? It's like teaching the fish only thrives your fishing ball. Well, yeah, so, right. I mean, that lines and bull zones and hedge pressures and all that, that portion, teaching how to fish, risk management, position management, how to use our pivots. You can remove our pivots and use your own pivots. You trade the same way on efficient pivots, right? But right, our boot camp is obviously rocket scooter centric, but you don't have to have the platform. It obviously helps you understand the stream. Can you learn how to recreate hedge pressures and bull zones from the boot camp? You can't. That's not something you'll learn how to do. It's a very complex process. Even if I were to release the code to the public, it's not even something you can go program in PineScript. It's such a complex thing to calculate. You have to have the software to do it. I mean, we had to create the software just to be able to do it. Like, we couldn't just plug it into Thinkorswim or something. So unfortunately, if you're going to use our levels, some of them are manual calculations. The yellow line is manual calculation, but like the 99% of the margin value is something you can go figure out yourself. That one we teach you how to do. Everything else, yeah, if you're using our tools, you got to obviously, you know, pay for the tools. They're not that expensive though. I mean, the platform itself is $2,500 at Black Friday. You get everything we ever make for that one price. Normally $4, but that, or it's $159 a month for the tools. We've got 100,000 user accounts, so it's like, you know, pretty big, I would say. You'll have a big community to hang out with and trade with. You can find some sweet options plays. Oh yeah, James. A lot of people use liquidity pockets to sell vertical put spreads down in the bottom bear zone when you bounce from the top. They use that 90% just to bet that the market doesn't go below to collect premium, yeah. Double layaway plan? Not really. DD bands are based on previous day's futures close, yeah. It's not 42 points, Mark. Remember, if you pay attention to the video, in the video it was 42 points at the time in January. I need to re-record the videos on the next bootcamp to kind of display that further. It's currently 58.50, and it's also written in the table for you. The video was like 42, 42, 42, but at the time it was 42. Remember, it changes when the margin requirement changes. That video is from January. Do I accept Pickle Coin as payment? Yeah, we do accept any kind of shit coins related to Pickle. Will there be a Black Friday sale for the annual or monthly membership? Never had one like that before. Probably not. Maybe annual, not the monthly. That's kind of already permanently discounted for now. It's 200 bucks, but it's discounted to 99 the first month and 159 every month, and that's going to stay there until a certain metric is hit, and then we're going to slowly raise our prices from there. But if you lock it in, it doesn't raise for you guys. So the current deal is the best it's ever going to be, 159 a month, and that's the lowest, and it locks in. So if we go to 200 a month, yours stays as long as you're keeping that membership active. So it's like a early adopter grandfather deal. Yep. They trade at 3 p.m. Yep, every day. 159 a month is, you go to Rocket Place, and then it's just there. Let me give it to y'all. And it also includes the boot camp and all. And the first month is only 100 bucks, so that also includes the boot camp. That's it. You get the platform, the tools, all that stuff. Here it is. There's the link. You feel you can replicate DD bands? If you could figure out how to calculate a risk interval, I would be very impressed. To calculate those bands for margin requirements, but if you can, it would be a very, very impressive feat. And if you recreate them, create your own tools out of it, just give us a gentle nod of credit if you try to sell it. Inspired by Matt's DD bands. would be the ultimate cool gesture. You're seeing $1.99 a month? Yeah, but if you go to checkout, it's got a coupon on it. So it's $99 on the first payment. How does the margin requirement change? Every day. They reevaluate it once a day, and they decide if it changes or not. Some things will update every day, small amounts. Some things will update once or twice a year. Your index futures, typically like S&P and NASDAQ, typically update a couple of times a year. It's not frequent. In periods of high volatility and markets selling off, it might update more frequent, maybe weekly or monthly. But every day, our algo will check to see if it updates. 007 is your indicator based on margin requirements. Dominique, lifetime is $39.99, but it's going to be $2,500 at Black Friday, which is next month. So wait. Yo, Shawnee, what's up, man? Awesome. Welcome to the team. You pull product margins team website? Yeah. That's pretty cool. Yeah, that's like, I hope to inspire other people to like take a similar path, you know? You know, our creative approach to finding indicators should inspire other people to create cool tools that even I'd want to use, you know? If you're trying to mimic the DD bands off of our process, it's a very powerful tool. The probabilities are very high. Like I said, if you sell it, just, you know, give a gentle nod our way, you know, inspired by Matt and his team or whatever. Whose lifetime Mars are yours? For the lifetime of the software, which should hopefully outlive all of us. Hopefully so. How important is AMT in my way of trading? I don't know what AMT is. I'll be stupid. What does that mean? Auction market theory? What is that? Remember, I don't subscribe to a lot of the conventional methods of markets, so some of these things I'm still kind of dumb at. What is it? Like, y'all have to teach me something. I've never even heard of that. What does it do? Somebody said, Topic says, why sell something if it works? Right. I mean, well, to extra streams of income. I mean, something works for you. Can't, the myth in trading is that you can scale trading infinitely. As a trader who makes millions of dollars, let me teach you something. You really can't. You really shouldn't. It's a myth. Now, let me start over. It's a myth that traders scale like this infinitely. No trader would want to. You're not, okay, once I make my first $1 million day trading, let me make 10 million, then let me make 100 million, then let me make a billion, then let me make a jillion, let me make a kabillion dollars, right? Doesn't work like that. Once you start making like a couple mil a year in trading, you're not going to double and triple down your money in trading. That's the riskiest, stupidest thing you can do with millions of dollars. Instead, you can take millions of dollars and put it somewhere and have $1 million generate 10,000, 20,000, 50,000, 100,000 a month in a very low risk business, right? So traders don't necessarily scale infinitely. Now, most gurus that have something that's shit, it doesn't make millions. It makes zero. So they'll sell it to make some money out of it because it's dog shit. But there's like a threshold. See, if you make too much money trading, you're also going to create business opportunities because you can't just scale a trading account infinitely. It's the dumbest use of your money. Like, I don't ever keep $1 million in my trading account. If I have 100K in my trading account, give or take at any given time, I make a couple hundred, I take it out, make some, take it out, make some, take it out, boom, buy a house. Make some, take it out, make some, take out, boom, invest in a business, invest in this, invest in that. And so creating like something to sell, if something is really good, is just another stream of income off of something that already makes you money, just it makes you money twice. Like certain strategies you wouldn't want to sell because the arbitrage would kill the strategy, then you shouldn't sell it. Like if you have a technique that you can mirror some kind of trade somewhere in some market and there's an arbitrage opportunity, you will literally tell nobody because it'll ruin the opportunity for you. But mathematically, if you have a strategy that's a volume pivot that says everybody buy at this pivot, it only benefits you even further the more people that do it because there's more buying pressure at a certain level. Penny stock pump and dumpers run on the same philosophy. If everyone buys here because I say buy here, the market's going to go up and the first person in line buys the thing. So that's not what we're doing with rockets here. But mathematically speaking, if you have something that works and it's a volume based thing, you would want it to be widespread because it only enhances how much it actually works. Yeah. But the idea is like once you start making tons of money trading, you stop trying to think further in the trading. The people that haven't gotten there yet are always like, man, I can't wait to be worth like 50 million one day. If you become worth $5 or $10 million day trading, then you go get a job at Goldman and get a $10 million signing bonus and go trade for no risk of your own. Once you start becoming wealthy, you stop wanting to risk your money because the stock market could vaporize your entire net worth in a bad day or two or a bad month, right? So if you're lucky enough to become a millionaire as a day trader, you better diversify your stuff and then keep trading the same amount. $1 million a year, whatever income is great as a trader. If you're pushing for 10, 20, 30 and you're not running a hedge fund, you're just being really reckless with your own money, So I always tell people when something, the myth is when you become too wealthy or when we become wealthy, the myth that people believe is that you should only be a day trader. That's all you should do. How dare you do anything else? How come you're not making billions of dollars day trading? Well, you really can't. Even if you could, you really shouldn't, right? It's like diversifying is kind of like as a trader, I was always very well off, but I didn't become wealthy until like the last 5 years and it's gone like this. I mean, I've always been I would say I like to use the word rich, but I've always been very well off, but wealthy where like if I want to buy a house with cash, I can buy a house with cash, right? Like that level of just, I want to buy a Lambo tomorrow. Which color do I want? Fuck it. Let me get both of them. Like that level came from scaling in parallel with opening other businesses. Like day trading was always like, yeah, this is great money. This is great money. But it was never like, fuck you money. It was like, I mean, I guess it was fuck you money to an average person, but it wasn't like $100 million Lance money. That's bullshit is a lie. The day traders aren't pulling that kind of money. And you wouldn't. Like people will laugh at you like, oh, you're sitting at your home with a $50 million trading account. One bad month and everything you've ever worked for in your life is gone. You open a coffee shop, even if it sucks, you got $1 million in the hole and you got 5 years of squeezing juice out of it before it finally dies. You're not risking all your eggs in a single trade kind of thing. Yeah. So wealthy is 2 micros. Yeah. So I always tell people there are levels in trading. Now, again, some people may disagree with me and say, well, I make $10 million a year trading. That's absolutely fine. If you're worth $1 billion, then $10 million is nothing to you. If you're worth $10 million or $20 million and you're risking $1 million, maybe not that big of a deal. If you're worth a couple $1,000,000 and you're still risking a couple $1,000,000, you're the same place as being worth 10,000 and risking 10,000. You should always have a fraction of your money in day trading to make enough money to make it worth your time. Like if I make 30,000, 40,000 a day, not bad. That's not a bad haul, especially in the prop side of things. I didn't risk any money for this, right? Just a little tiny bit. But most smart traders, once they start, like my friends that are doctors, right? They could become a doctor. One of my buddies, internist, probably makes, I don't know, 300, 400,000 a year or something like that. What does he own? Like 20 other things that aren't related to hospitals. And this guy's like ballin' rich, like stupid rich. Diversify, spread out, do other things with their money. Really smart. Matt's coffee shop. Would you guys come to my coffee shop? Would y'all drink coffee there? Some rocket scooter espressos. Dude, I would make those things so powerful. I would find a way to extract 10 times the caffeine from the beans. I would make it like rocket express, like rocket brain fuel, Steven Dix made 7 million on a Beyond short yesterday. I don't know who that is. Yeah, these guys are just high stakes gamblers. Like, you know, you're gonna have a family and, you know, build wealthy empire, you know, and you're good at trading. If you're good at trading, I'll give you guys another tip in life. If you're good at trading, you're probably good at everything else you do. If you can master trading, you can run a business. You can run any kind of business, actually. Trading is one of the hardest businesses to run for yourself. You can manage this, you manage anything. So if you're not diversifying, you're just a gambler. If you're diversifying, you're smart. Opening like parallel streams. I always thought I was 18 streams of income at this point in my life. By the time we open our next 3 things, it'll be 21. Like, most of them, I just sit back and collect money doing absolutely nothing, but just nothing. Like, I don't do anything and it makes money. Imagine that, right? That's, as a trader that starts making money, start even thinking further than that. Trading, you're fighting it all day, every day, and getting your blood pressure up. If I quit trading tomorrow, you guys wouldn't believe how much passive income I make a month, right? Start dreaming like that as a trader. Like, make enough to put it here, then make enough to put it here, then make enough to put it there. And those things are continuously generating for whatever you do, right? So, and if you blow up all your money trading, next month, got a bunch of money, come right back to your pocket. And all those things are assets too, so they have value. It's like investing your money in a bank. It's not like you're spending money on something. You're putting your money in something that you can probably sell and get it back. Hello? It looks like you brought pickle with you. My funded list. So after you can profitable with trading, anything that you want to do, business is a personal thing. I always tell people, if you start a business or get involved in a business, it should be something that you love to do. Because you're going to obsess over it and obsess over the numbers and the details, obsess over the suppliers, the customers, the customer taste, the customer likes. You have to understand your business, meaning you got to be your business's best customer. So you better like what it is you do. If everybody is a different example of, you know, what you love. It's not, or my example is not like what you love. And so you have to find out something that you would just love being part of and do it. It's like when you invest in a stock, you know, buy something you like, because you're going to have to read up about it and learn up a lot about it. You might as well be in an industry that you like learning about. You ever your blanket? Oh, you want the warm blanket? The warm one, the heated one. Okay. No, she's like, dude, she's dressed up over here like she's going skiing. She's got like layers of sweaters and blankets and stuff. I trade live every day on YouTube. That's correct. Yes, sir. If I ever go down the route of full automation, I talked about it this year with a friend to automate it for myself. Yeah. To try to automate liquidity pocket trading. As simple as that. Do I do long-term ETF investments? I don't. IDOC does, right? You buy like ETFs, right? Yeah. IDOC's got a portfolio of ETFs that she holds. I honestly, I'll be honest with you, I don't invest in the stock market. I don't own any stocks currently at this time. I haven't for a while. I'll sometimes buy options every once in a while, but day trading is enough of my appetite for the stock market. I don't have a 401k, IRAs, nothing. I thought about opening a Roth though. It's one of the things I've been thinking about doing, just to park some money somewhere else. But other than that, I don't maintain an active stock portfolio, nothing. Ask chat what? You can. What do you mean? Oh, I don't know. That's what I'm thinking. I don't know much about it. I just know someone told me to do it. How does that work? Backdoor Roth. Yeah. Do you want a green juice? See, yeah, throw 2.5 million in 5 ETFs to pay dividends, and you'll get 5 to 6% in dividends. That's what you do. You get dividends and stuff, right? Yeah. Partially too is because the last like 6-7 years of my life have been strong, hard capital investments, building Rocket Place, Rocket Scooter, running the, you know, company with millions of dollars to like build the platform and the Rocket Place and all that. So at that point, like I just basically cleaned out whatever cash I had that was liquid and just started building this stuff with it. I think I owned some stock way before I built Rocket Scooter. But since then, I've been more aggressively leveraging capital to invest in bigger projects. So, a Chiggle, I don't. But I think once I like, as time goes by, maybe I slow down on my trading as the years go by. I might sort of like build a stock portfolio with a chunk of money. I just, I'm at the level of my life where I'm completely like being riskier with building stuff and taking bigger risks with capital. Building Rocket Scooter like is a risk, right? First business start for newbies here. Well, yeah, like I said, you have to do something you like. You can research a million clever ways to make money. It's something you like to do. You can always Google like good ways to generate passive income. There's tons of stuff people do, like parking garages, parking lots, laundromats, like little things like that. Invest in construction services or service businesses. Yeah, construction, power washing, gutter cleanings and stuff. There's all kind of tons of ways for you to own something that generates money. But then again, you have to love something that you do, you know. Storage units. That's what Mike, that's what you did. And one e-commerce, there you go. Tree trimming. Dude, there's tons of things you can do. But like the trick is it has to be something that you love, because you're going to be like balls deep in it, you know? Shit, I get it on my funded TV in a second. What is that? Oh, can I have one of those? Thank you. Y'all tried the mint Pockies before? I've never tried them. You know what I mean? You want to be part of something that you're going to be passionate about, caring about. Nothing sucks more to be trapped in a business that's struggling and you can't stand it. You also hate what it is. You'll never give yourself the motivation to dig out of holes and problems. Okay. Love you guys. Time to go. Don't forget to join me on My Funded TV. We'll be live there. No stream this afternoon. I gotta go play doctor. What? I gotta go take care of a sick eye doc over here. Join me live, guys, here. Later. Mint flavored. It wasn't bad. It was like chocolate with mint on it, but the green tea Pocky is really good. I think Jay has a good idea. If you have less than 100K, invest in yourself. That's the first thing you gotta do. Do something good for yourself. Oil and gas, private investments. I know people that do that and they do very well. My brother is actually thinking about getting into this. They have some oil wells, that like a group of them that live together have oil on all their properties. They've been trying to get into some kind of way to sell that oil. I don't know much about it though. I'm imagining that can be very profitable. We'll see y'all later, guys. Thanks for tuning into the stream. I love y'all to death. This has been a fantastic afternoon. Thanks for hanging out or morning. 8,000 whatever bucks. Thanks for hanging out with me today and live trading again. 7-week win streak. It's been crazy. I'll probably be live with Tradeify, by the way, by next week. Let you guys know. Wait, Michael, you're gonna buy a property out in Dripping Springs? Buy alpacas and make cashmere? Dripping Springs is cool, man. I love it out there. Bro, I'll come hang out at your farm, man, and come chill. We just take road trips out there to Dripping Springs all the time.